right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Bitcoin is getting a bit of a move up directly from the main support level that we have had marked out on the charts for the last couple of weeks. If you guys have watched the videos and watched the live streams, I've emphasized the major confluence that was down in this area of support, saying that we should at least expect some sort of scalp long position from this general area. Now, once we started to chop down, making these lower highs and lower lows in a descending channel, it became even more confluence based off of our trend here to see at least some sort of bounce from here. And we can talk about some local targets. We can talk about the local order flow that's happening right now on the charts. I am long from around 62,658, I think it was, or something like that. So I did take a long this morning on Bitcoin. I also did take profit on the Solana short yesterday. I'm still in the short, but I'm 90% out of the short. So we finally came down. We finally got the liquidity grab off the rejection yesterday. We shorted TP here. And I also told you guys I did long last night the SFP and expecting a TP around 79 as a TP1. I almost got stopped out, guys. I left a little bit of breathing room below yesterday's low. Like dollars or pennies away from being stopped out on that trade. But in both positions, welcome in, everybody. Thank you so much for being here. Glasshopper, thank you so much. RPing, thank you so much. Yes, guys, please hit the like button on your way in. Hit the like button if you get any sort of insight into the market from this live stream. RPing, thank you for modding for me, man. You're the best as always. Machi HK, welcome in, brother. Thank you for being here as well. And thank you for, guys, thank you for supporting and hitting the like button and just being here. Josh Brian, let's go, man. Welcome in. Tony CC, the man, the myth, the legend himself as well. Thank you for being here. Warthog Thunderbolt, let's pump it. Let's dump it. Let's play the scalps until we get some resolution. So, Satoshi Wizard, welcome in. Party of Six, more dump. No way. No, I think we are going to short-term pump, but we have to watch out. I'm going to go into this right now, guys. We have some bullish things on the chart locally, but we also have some bearish things on the chart, and we're going to get into this right now. Is this a bull trap? Are we about to dump to take out our 60K lows within the next week or so, or are we going to push up to much higher targets? I will tell you right now, I am not expecting to take out the $72,200 highs. I am not expecting that, but I am expecting at least a scalp long position, and I'll start talking about that in just a second here. But yeah, Mark Lowe, welcome in. All right, guys. And Mark, thank you for being here. Thank you. I'm glad you're new to the stream. I hope you get something out of this live stream. Thank you for joining. And all right, guys, let's get into this. So I've had this descending channel on my chart for about a week now, and we pulled this descending channel. When we did bounce here and made a higher low on the chart, we were looking at a couple things. We were looking at the triangle that could be forming in here. We were looking at a larger W, X, and then a three-wave Y to take out those highs before ultimately dumping, or we were looking at just the corrective grind continuing here after and coming down to the bottom of our channel, which was also in confluence with this support box. We've had this support box laid out since February 8th. We've pulled this support box here since February 8th, February 7th, something like that. And down here was the point of control of our 2024 range. So if I want to zoom out onto the daily time frame, and if we look at our prior range from 2024, this range in here, which was a very important range because this is when the institutional money was accumulating Bitcoin right pre-Trump, pre-election, pre-Trump went on the election. So that range, we had a lot of big money accumulating Bitcoin. They're going to defend their positions once we start getting down into this area. And if we turn on, let me see, where is that? That is this range here. You can see that our point of control, let me fix that. Point of control of this range is coming in here at that $63,150 area. And then we also had a daily level down there. Let me zoom back into the 2-hour chart now. If we look at our daily levels that we had on the chart, we had a daily level at $62,788. We had the bottom of our channel here at that area. We also had the pitchfork that was close by. Now, a couple weeks ago, the pitchfork was aligning a little bit better with the bottom of that channel. You can see a couple weeks ago, the pitchfork was right at the bottom of the box. Now it's a little bit lower, but it's the bottom of our bearish pitchfork. And we have our 786 Fibonacci, which if we pull a Fibonacci retracement from the lows of the crash to our corrective range highs, just turn on that 786 Fibonacci. You can see that 786 Fibonacci was down in that general area. Let's see, was that, yeah, I guess the original 786 that I had pulled was to this high, and that's why it's at the bottom of the box is there. But yeah, 786 Fibonacci is close by within this general area as well. Now, off the bigger 786 Fibonacci, we still have not come down there and hit that. And we can talk about that if this slow grind, once we get down to the bottom of these channels, guys, especially if we see this kind of slow corrective grind, a lot of this price action, this looked more corrective than impulsive. This looked more corrective than impulsive. This looked more corrective than impulsive. The only impulsive price action we kind of saw within this entire range was really this potential wave here. So when you see a bunch of corrective price action, both to the upside and the downside, then we can be looking at a larger corrective trend. And if we come down, we could reject from the midline to come back down again to hit our 786. It would be in alignment with the bottom of the channel, but probably by the time we get down there. And I want to focus on this price action in the last 24 hours, because obviously what happened on Sunday night, we lost our volume profile, our fixed range volume profile. So this has been the fair value of Bitcoin over the past 2-3 weeks here. We have considered the fair value of Bitcoin. First of all, let me turn off the daily levels. First off, we did find reacceptance back within this range. Now, I talked about this in yesterday's video. I talked about this at the beginning of the week. When we lost our upper range here, this was our range for most of 2025. This was considered the fair value for Bitcoin, priced in between those levels up there. Let me just turn on that range. So it was overvalued at $110,300. Our fair value for Bitcoin for most of 2025, where the market considered Bitcoin at fair value, was around that $96,500, $96,600 area of price. And then our undervalued price for Bitcoin in the year of 2025 was $85,700, let's say, $85,700. Well, we broke that range down a couple months ago, or maybe a month ago. We broke that range down with a high volume breakdown to the downside, increasing volume on the breakdown. So when you see an upper range like this that finally gives way, when the market is not willing to buy up at fair value to bring it back up to your higher prices. And we did. We had a corrective move up to the point of control. But once we hit this point of control and saw a massive sell-off, that should have gave us a hint that we were going to break this range down. And now the market was going to start looking at a new lower fair value for Bitcoin than it had been for the year of 2025. So when we lose this range with volume to the downside, we now have to look at our prior range of balance for a fair value for Bitcoin, and that was in 2024. So if you fall back inside your range, generally when you break a upper range down, you'll test the value area high of your prior range, which was about what was that? $92,000. Let me just turn that on real quick. Sorry, $70,000, right around $70,000. If you do not bounce from that area, showing that the market is willing to buy up at the previous overvalued, and if you start to fall back inside of that range, now in some ways the market is finding reacceptance back within that range. So repricing Bitcoin's fair value back to 2024 levels. And you can see within the past 3 weeks, Bitcoin has been priced into the 2024 range. And if we look at where the dump ended a few Thursdays ago, almost 3 weeks ago now, and we turn on that value area low, that is exactly where we bounced. If we look here, value area low of our previous range, we bounced perfectly at that value area low. So the market is willing to buy at the 2024 undervalued price, but they were not willing to buy at the 2025 undervalued price. So now the market has kind of reconsidered the fair value for Bitcoin back to 2024 levels because we have found reacceptance back within this range. Let me clean up this chart a little bit here. I'm going to turn off this parallel channel for a second. And I am also going to turn off our volume profile for just a second. So we tried, after bouncing from the value area low, we were able to pretty much close the daily candle just about at the POC, and we made a run up to try to break, to try to break out of the 2024 value area high. We failed. That was also our pitchfork, our bearish pitchfork band, that because we'd lost the midline and we fell through the band, we backtested bearishly. If you cannot get back above it, you expect to fall to the bottom of the pitchfork. Actually, let me go ahead and talk about that in just a second. I'll talk about the pitchfork trading in just a second. Right now, we're talking about the volume profile trading. So you can see we attempted to break out of it for a few days in a row. We could not sustain above that 2024 value area high. We have a corrective move down that lasts about a week. We bounce from a local golden pocket area. We make another run up to try to break out of that value area high. Now, that also happened to coincide with our current 3-week range value area high as well. So if you pull that local volume profile, you can see that our value area high was up there of our local volume profile. So we rejected up there. We rejected making a lower high, and then we fell down to the value area low of our local volume profile. Just local range trading, scalp trading within a small range, within a larger corrective move after a massive dump. Right? So we're just letting the market reset a little bit. And this is where active traders get involved here. Scalping, day trading. But looking at those important, when I say these corrective ranges form, it's important to look at volume levels, liquidity, and Fibonacci retracements, things like that. But we did bounce from the value area low. We made another attempt to come up to the POC. That was this last Saturday, a few days ago. We did front run that POC, which was surprising to me because we also had a golden pocket up here. And now we do have a new naked weekly point of control, I believe, that's up there. But we lost the range, our local 3-week long range. We lost that range with a volume imbalance candle on Sunday. That volume imbalance candle where you saw a big break of the value area low to the downside with increased volume gave us everything we needed to know. And the daily candle did end up closing below the value area low. So that was our first major sign of weakness because we had our first major daily candle close below the value area low, a sign of weakness. So what did we see on Monday, the next day, which was yesterday? We bounced up from a local level. We back tested that value area low. And this is where, guys, we were looking for the short yesterday. I ended up taking the short on Solana instead of Bitcoin, but it was pretty much the same scenario, the same strategy we were using. A bearish back test of a range that we lost. We also had the fair value gap of this candle. There was a fair value gap here that was created from that Sunday candle. And we ended up just coming up to fill most of the fair value gap. We didn't fill it completely. We still have a little bit of it left in here. But we filled most of the fair value gap. We came up, we bearishly backtested that value area low. And when we rejected there, the second we started rejecting here, guys, I said, be aware, we're likely to take out the Sunday lows. And sure enough, we come down, take out the Sunday lows, get a small bounce up to VWAP, and then we drop to our major support level. And this is where we're finding some support here. On Tuesday's live stream and in yesterday's video, I talked about I would be interested in taking a long from this position if we do have confirmations on the charts of bull divs. Well, now we come down here. Do we have bull divs on the chart? Yes, we do. We have lower lows in the price action, higher lows in the momentum waves. That is on the 2-hour on Market Cipher B. And even between last night's lows and today's lows, we have 2-hour bull divs on NAMI. If we go on to the 1-hour chart here, on the 1-hour chart, and we're looking at these last Sunday low, Monday low, or Monday night low, and then Tuesday low, you can see we do have very nice bull divs on the chart. Multiple drives of bull div on the chart. Money flow increasing to the upside, crossing into the green here. So I saw the confirmation I needed personally to take along from this area of resistance, support, excuse me. We were also bouncing from the bottom of our descending channel. And remember, when we are in these corrective structures, the tops and bottoms of these channels are often respected. Also, the midlines are also respected. We rejected from the midline yesterday at the same time we were rejecting from that bearish backtest of the value area low. And now we have locally changed market structure bullishly. by taking out some lower highs on the chart. We have changed market structure bullishly by taking out our $63,400 highs, and we are pushing to the upside. But is this a real reversal, or is this a trap, guys? Are we just bound to make another lower high before ultimately breaking this thing down? We could come hit 62.2 and see another little bounce from there, kind of chopping around the bottom of our channel, maybe make that left shoulder head right shoulder before seeing a move up to, 69K. Or are we going to break down and take the 60K lows in the next few days? I do think it is likely that we do at least see a move up to 65K. And I posted about this in the Telegram earlier today, but we had the bull divs on the chart coming into our biggest confluence of support on this entire move down of this corrective channel. The biggest confluence of support was what I just laid out to you guys, that daily level, that 2024 point of control. It was the bottom of our channel, the bottom of a pitchfork, and a 786 Fibonacci. Now, if we look at our order flow here, guys, there is a couple things to be concerned about. First off, we did close the daily candle below the value area low. So until we can get back above the value area low at about $66,350, we have to remain with a bearish bias, an overall bearish bias, that we are going to come take out those 60K lows. Now, if we can get back inside the volume profile, we're likely to come up to 69K to grab that liquidity that I showed you guys in yesterday's video that is above 69K. If we look at our Model 3 heat map and we go to the past week of price action, was it 2 weeks of price action? Let me see here. Last 2 weeks, 1 week, sorry. 1 week, 2 weeks, it doesn't really matter. You'll see that the major liquidity is resting above those Saturday highs into our $69,000 point of control. So that is acting as a magnet to bring us up there. Now, are we going to see Bitcoin rise up to 69, or are we going to continue a trend of a bull trap where we continue to make lower lows, lower highs, lower lows, lower highs, and continue to dump down within this downtrend here, this local downtrend that we've been seeing downtrends and downtrends here? Let's go to the order flow and let's look at the order flow and let's diagnose this. So if we go on to our order flow and we look at our CVD and our open interest, I will say one thing here that we are seeing, and I pointed out this to you guys earlier today in the Telegram, and I pointed this out last night in the video. We are seeing from yesterday's highs, remember this area right here was the bearish backtest of our value area low. We dumped, we made new lows. But if you look at our CVD from that point, your CVD is down here. So our CVD overall is increasing from that area. Now, earlier today, it was increasing a lot nicer, but we are seeing higher lows on the CVD, or it's relatively flat right now. It's relatively flat. But we were seeing higher highs on the CVD while we were making lower highs on the chart. So we were seeing bearish CVD yesterday. We were seeing bearish CVD even up to this high here, or this lower high here. You could see we were seeing bearish absorption. And why was it absorption? It was bearish CVD divergences, but because our open interest is steadily increasing here, we were seeing bearish absorption yesterday at the golden pocket. When a lot of people were longing the golden pocket yesterday, we were seeing bearish CVD, which told me that the golden pocket was probably not going to give us a real bounce. Let's pull that golden pocket real quick from the range lows to the range highs. And if we turn on that golden pocket, we first of all had front run that golden pocket on February 12th. On that Thursday, we did not quite come down and touch the golden pocket. So we did have a golden pocket there. But if we look at when we came down to the golden pocket yesterday, well, first of all, we touched it firstly Sunday night, at least where I'm at in the world. We came down and we touched that golden pocket Sunday night. We did get that nice bounce from the golden pocket, but that bounce from the golden pocket coming up to test that value area low, we were seeing bearish CVD divergences. We got the drop. We made new lows. And then even coming up to backtest the VWAP, we were continuing to see bearish CVD divergences on the chart, bearish absorption on the chart, which told me that we were likely to not hold that golden pocket. So we dump overnight, come down to our main support. And now we start getting a bit of a swing failure pattern from last night's low. So if we look at the low that we made last night, you can see this morning we came down, we grabbed the liquidity from that low, and we got to rise up. That's why I longed earlier today. We got that liquidity grab. And we also were at the bottom of our channel. So I was expecting in our box of support. So I was really with bull divs on the chart. I had all my confirmations there to take the scalp long today. Now, if we can go back to the order flow here, we are still in some respects seeing some bearish CVD absorption, right? Higher lows on the CVD, lower lows on the price action, and our open interest from the lows is steadily increasing until just very, very recently, until the past hour or 2 hours, our open interest was steadily increasing. So we are seeing bearish CVD absorption, meaning that this could be a bull trap where we do only come up to backtest our golden pocket, which I showed earlier today in the Telegram. If we pull from yesterday's high, the bearish backtest of that value area low down to today's low, this golden pocket at $65,000 will be my first TP on the long position. Knowing that we are seeing potential bearish absorption on the charts, I am playing this as a scalp and I am locking in profits almost immediately and setting my stop loss to break even. I'm going to protect my position as soon as I can. Now, you can also see that lower high pivot, that rejection from the VWAP yesterday. We have that internal liquidity grab there. And what do I say on this channel about liquidity grabs into golden pockets? It's a prime setup for a reversal. So if we grab that liquidity into this golden pocket, we could just now continue to have that bearish absorption play out and make another new low. That is why I am long from down here. I will take a TP1 up here and I will move that stop loss to break even. Now, on the other hand, if we go to the CVD chart and the order flow and we look at from today's low, we are seeing very slightly, but we are seeing lower lows on the price action within our move up today. We are seeing lower lows on the CVD. We are seeing higher lows in the price action, bullish market structure locally today. And for the most part, our open interest was increasing until about an hour ago. So we were seeing local bullish absorption against the bigger bearish absorption. We are seeing local bullish absorption on this move up, telling me that this move up is not done yet. We are not going to reject from here and roll over. That tells me that we are at least going to come to $65,000. Now, once we get to $65,000, that's a different story. You know, depending on, first of all, I already have a limit TP order set there to lock in the profit. I will move my stop loss to break even as soon as that happens. But we might reject from here and continue down. Or if we can now break above that area, we do have some more confluence. If we're going to see a bigger rally to the upside that is going to take a week or so, we're bouncing from the bottom of the channel after rejecting from the top of the channel, after losing our midline, after backtesting our midline bearishly, we've come down to the bottom of the channel. If we can break above the midline of the channel, which it's a zone, it's kind of this zone in here. If we can break above this zone here, and if we pull that Fibonacci again from yesterday's high to today's low, we turn on our 786 Fibonacci, depending on when we get there. Actually, I would rather say the 886 has a little bit better alignment within that zone. And oftentimes in these sideways ranges, the 886 does bounce us, just like the 886 bounced us right here earlier in the week. Remember that, guys? If we pull from our high, from our low to high here, and we look at that 886, I'm just going to change the color. Where did we bounce for a little corrective move up? At the 886, right? Because sideways ranges, the 886 is a big area to look for a bounce. Also a big area to look for a rejection. If we continue in the sideways range, that 886 up there, we could reject in this general area. 66,000 instead of 65,000 where our golden pocket is, we could come up to 66. But if we can get back above our value area low, this is where things will get very interesting, guys. We need to watch for a fake out to grab the liquidity from yesterday's high and a fake out of getting back inside. And then if we reject, I would expect new lows to come in on the chart. It would just be a liquidity grab. But if we can get back above not see a liquidity grab, but maybe see a back test of that area and a reacceptance back inside of this range, then I would be expecting a move up to 69,000 or 68,000. And let me talk about why 68,000. So if we look at from the last rejection from the top of our channel, that lower high at $71,000. And let me just turn off some of these levels real quick. That lower high at $71,000. If we pull a Fibonacci from that last kind of high touch of the channel to the low touch of the channel we just made today, and we turn on our golden pocket, our golden pocket is coming in at $68,000. Well, do we have any other confluence there at $68,000? We do have, if we turn on our naked daily points of controls within this range, do we have a naked daily point of control? Yes, at our golden pocket. So we do have, and we have that internal liquidity grab right before the aggressive dump on Sunday. Very, very important. Naked daily point of control up there. So I'm going to turn off our PVP indicator. You can see we have a naked daily point of control pretty much at $68,000, right where our lower high golden pocket would be. And we have this internal liquidity, which doesn't look like much in the grand scheme of things, but this is where we rejected from the VWAP and saw a big flush to the downside. And remember, on the order flow, that was a lot of fresh short positions coming in. At this lower high here, you can see that right when that happened is when we saw a lot of fresh short positions coming in, bears in control, dumping us down. So there is obviously going to be a lot of stops that shorted within the dump, this aggressive dump, that are going to be putting their stop losses above that high. Technical traders that are going to be putting their stop losses above that high. Range traders, scalp range traders. So even though this lower high looks insignificant in the grand scheme of things, we do have stop losses above there. Anyone who shorted in this area. And that is now an area with our naked daily point of control in there and our golden pocket in there where I will be looking for another potential rejection at that level. So we could mark that out as a potential rejection area. And then, of course, the main rejection area would be to continue trading within this channel. Let me go ahead and get rid of that now. To continue trading within this descending channel here. To bounce, we rejected the top of the channel, and I get it, the pivot was set from that high, so we can't say we rejected from there. It was made from that pivot. But we came all the way down to the bottom. If we bounce and can get back inside our volume profile, we could expect to move potentially up to the top of the channel. Well, what is at the top of the channel? Our value, or our point of control of our 3-week long range, but we also have a fresh daily level right up above there. And what is the most important things in these sideways ranges, guys? I've talked to you about this many times. You guys should be able to answer this question. The two most important things within a range, liquidity and volume levels. Well, do we have a volume level there? Yes, it's our point of control. It's our fair value for the range. Do we have liquidity there? Absolutely. The weekend highs that front ran that touch there. So we have liquidity, we have volume, and we even have time level confluence. We even have trend rejection confluence. We have great confluence. $69,000 would be another area where I'd be looking for potential short to take out your 60K lows. If we get up there, we have a lot of work to do. We still have to get above 65,000. We still have to get above 66,000, 68, and 69. But these are the 4 TPs that I have on my long trade right now. $65,000. I will take out 25%, lock in 25% just to be safe. $66,000, depending on what happens here, I might not take any profit. If we start to reject, I'll take another 25%. If we're not going to reject there, I'll leave it running. $68,000, no matter what we get here, I'll take out another 25%. And then I'll close it if we start to reject from the liquidity grab. Remember, when we're seeing a liquidity grab, we want to see that pierce above those weekend highs into our level of resistance. And then as soon as you start to lose that $68,700, let's say, that is when you can enter the short. Stop will go above that local wick high, and I will be targeting now I'll leave it open to target below 60K down into that $57,000, $58,000 macro. And that could be a super good risk to reward trade, a swing trade in some respects. But we'll see how that, if we even get up there, we'll see if we get this trade going on. But that is the next major short would be from around $69,000. And I will be looking for shorts also on these 68,000. I'll look for a short if we SFP yesterday's highs and reject from the value area low. I'll look for another short from there. Now at $65,000, I don't know if I'll look for another short. Guys, yesterday I told you that I did not short Bitcoin from this area, but I shorted Solana. But I forgot that I actually did short Bitcoin on MEXC, not on my BYDFI exchange, which is my main exchange, but on a smaller account, I'm short from around $66,100 here. But it's already been locked in. Most of it's already been locked in. And I would potentially compound that if we're about to reject from 65K, if we're going to see that liquidity grab and rejection from these lower highs here. But Bitcoin is trending nicely. We are trending within this descending channel, which in some ways, guys, if we break above 69,000, then we're at least coming up to take our $71,000 highs. But then in that case, we could start look at taking our 72.2 highs. Now, don't get it confused here, guys. Overall, just like I explained in yesterday's video, my overall bias is that we are going to come take out our 60K lows. I do think we are going to see a drop. I believe that this range here that we've been in for the last 3 weeks is a corrective range. And no matter what happens within this local range here, whether we're going to come up and even take out the range highs one more time before ultimately dropping, this to me is a corrective move, just like I was very strong on this being a corrective move before another big dump. I am very strong on this being a corrective move before we get another dump to take out the lows and to finish not only our larger 5-wave move to the downside, but our extended 5th wave. Let me get rid of all this real quick. Our extended 5th wave, which is our rejection from 98K. This impulse is still incomplete. This impulse on the bigger daily time frame is still incomplete. Remember, we are looking for those to play out. We still have, because of our rejection here and our wave 2, that running flat that lasted a week, we could spend up to 4 weeks within this range and still not invalidate it as far as time goes. So we are only, 19 days into it. Let's zoom out to the 12-hour chart, and we can pull that measurement tool. We're only right now, 18 and a half days into this thing, guys. We could still go another 2 weeks within this corrective range, or another 10 days, let's say, within this range, and still not invalidate it as far as time goes. So for the next week, we could see a rise up to 68, 69, maybe even 71 before seeing a dump, and it would still all correlate as a wave 1, wave 2, wave 3, wave 4, wave 5. But that's what I'm looking at, guys. We do have local bullish absorption that was playing out. Now, right before I started the stream, we started to dump here pretty aggressively on this open interest, and I do not like this. I've told this to you guys on my channel for a long time. I've back-tested this for over a year now. I've been looking at when you're seeing a prolonged, a steady increase in open interest, and then you have that prolonged drop in open interest, it tends to invalidate the bullish absorption that we could be seeing on the charts. So I do not like how now we're dropping here. In some ways, we've already invalidated the bullish absorption because now our open interest is going lower. As we're from this low, our open interest is lower. So we are seeing bullish CVD divergences, very slight bullish CVD divergences, but we are not seeing bullish absorption anymore. But I still think we can get that move up to 65K. 65K is going to be the first target where if we hit it during the live stream, we can come in, we can look at our 15-minute chart. If we're seeing some bear divs as we're coming up there, I will take some profit. I will maybe even look to flip a scalp short. But now we can also look at forming a new range, a new micro range here for the next day or two. Right? We had a range up there for a couple weeks. Now are we going to form a range in here for a couple weeks? So if we're going to reject, we could come down, make another new low, grab the liquidity of the lows. We'll have to see how this plays out. But welcome in, everybody. Let me get a drink of water, then I'll check the chat here. Thank you all so much for being here. We can go through some of the altcoins as well. And we'll just keep an eye on this. We'll try to get some live trades in. All right, thank you guys. Mind Tapestry, welcome in. Yeshwanth, much love to you as well. Darksby19, Patrick, Crypto OG. And is that Jason Casper in the house? Jason Casper, what is up, my man? So good to see you in here. Guys, Jason Casper has been such a great mentor of mine. Really great human being and an even better trader. Actually, he's a better human being than trader, but I love the guy. Jason, thank you so much for being here. Let me know, Jason, what are you thinking? I am long from around $62,650. My first TP is going to be at that lower high golden pocket. I don't know how long you've been here, but I was just explaining how yesterday after bouncing from our golden pocket, we bearishly backtested that value area low. And upon this rejection, we were looking for at least new local lows below this low, below the Sunday lows. But we ended up continuing to grind down with some bearish CVD until we came to this main box of support. This main box of support, we've, at least on my channel here, has been the main support level with the most confluence for the past 2 weeks. This has been the level that I've been looking. If we are going to make a lower high, this is our do or die level where I expected to at least see a scalp long opportunity from this area. Now, we got the bull divs with that. We got the confirmations here on the chart. We got the confirmations on the chart, and it gave me the opportunity to long. We also got the swing failure pattern from last night's lows. So I am long, but the first TP for me, 65K, I will probably lock in 25% because we also have that internal liquidity grab there. And we are still seeing, at least on the aggregated CVD order flow at open interest, the aggregated open interest here, we are still seeing some bearish CVD absorption, guys. Lower highs on the price action, higher highs on the CVD, and our open interest is pretty steadily increasing except for the last 2 hours or so. So this bearish CVD absorption has me concerned that we might make a lower high at 65K and continue down. Also, because we did not hit the 786 Fibonacci, if we look at that 786 Fibonacci again, we did not hit that 786 Fibonacci. I'm long from 786 at 62.5. 65K is super important. If we flip, we could go to 69K or higher. Yeah, I agree. Jason, for me, first level, our micro level, because I'm in scalp mentality here. So I shorted this yesterday, took profit down. First take profit was taking out those lows, took the rest of it down here. I am also long from down here. My first take profit, 25% is just going to be, actually probably 20%, is just going to be at this 65K level. Just because that internal liquidity grab there and some of the bearish absorption that we could be seeing on the charts, on the aggregated open interest charts. But if we can get back inside this volume profile, man, I think 68K is also a level I'll be watching because we do have that naked daily point of control sitting there, as well as our golden pocket from that channel high rejection, that Saturday rejection, not that one, the 71K highs. You can see that 6.5 golden pocket at 68K is right on top of a naked daily point of control. So for me, that is a bit concerning when you have a golden pocket along with a naked daily point of control. That could be an area at 68K where we do see a rejection. Maybe everyone's waiting to take out the liquidity at 69K. We only come up here, we reject, and then we drop. So another TP for me would be up at 68K, and then of course 69K, that weekend high. And guys, remember, weekend highs often get taken out. What have I been talking about within this range over the past 3 weeks? Weekend high at 72.2, weekend high at 71K, weekend high at 69.7, 68.7. All of these have been weekend highs, and weekend highs are likely to be taken out more than if it was a high put in on a market open, when the market was open, on a day where the market was open. So we have to watch for this potential rise up. And technically, this descending channel that we are seeing, let me go ahead and clean up this chart a bit here. I do not like to have it this messy. This descending channel that we have had on the chart for the last week or so is a bullish structure. When you see a descending channel like this, it is a bullish structure that has a higher probability to break to the upside. You know, we got our initial 3-wave corrective move up, then we've kind of just been trending within this structure. Coming down and hitting the bottom of the channel in confluence with our biggest support level with bull divs on the chart, this could give us a rise up to the top of the channel, which happens to be your 69K point of control. And that 69K point of control, this guy here, 69K point of control at the top of the channel, daily level up there as well. I mean, that could definitely, we could pump up there, Jason. We definitely could, man. Got to keep your eyes on those dang weekend highs. Yeah, man. Seriously, dude. You know, I see so often those weekend highs will just come up to wick out a weekend high or a weekend low, by the way, and then we'll just continue the trend. But absolutely, man. Okay. Sadi Esmera. I'm sorry. I can't pronounce that name. I butchered it. I'm short at $64,400. My stop loss is $65,200. Shall I increase my stop loss or exit the trade? First of all, you should never, your trade should be calculated based off your stop loss. So if you're increasing your stop loss, you're going to be risking too much, right? You want to risk about 1% per trade, 1 to 2% per trade. So if you're short from $64,400, let's just throw it right there. That's close enough. Your stop is at $65,200. Let's say you're calculating your position size based off of 1.27. I'm just going to say 1.27% stop loss. I don't know where your TP was, probably taking out those lows there. That's only a 2.5 to risk to reward ratio, but okay, that's decent for a scalp, right? 2.5 to 1 risk to reward ratio. But remember, you're calculating your stop loss based off of that percentage, based off of the percentage of 1.27. So let's say you have $1,000 account. $1,000 account, you're risking 1% on this trade. You're risking $10, right? Because 1% of $1,000 is $10. So if you're risking $10, you're going to divide that now by this percentage, but you got to move the decimal over 2 places because it's a percentage, right? That's just the way you do it. 0.0127. So you could put on $787 on this trade on a short if you entered at 64,200, and if you come up to 65.2, you're going to get stopped out. You're only going to lose that $10. But that's the position you can put on. Now, if you increase that stop loss, you're saying I want to increase that stop loss. Let's just say you increase it to, you know, where the midline's at, or above, like let's say above the 786 Fibonacci. Let's pull that 786 Fibonacci real quick. And you're going to put it above the 786, pretty much at the midline of the channel. Now your stop loss percentage is 2.2%. So if you're risking $787 still, or whatever you originally set your position size for based off your stop loss, you're going to lose almost double what you intended to lose. And that is not a good way to trade as far as long-term trading goes. Also, your risk to reward ratio has just decreased so much that it was almost not worth it to enter the trade if you would have originally set your stop loss up there. So the thing I would say, you're at 64.4, you entered at 64.4. Man, we did have a little bit of a fair value gap in here that you could fill in. I think personally, let's look at the low time frames here real quick. What do we see here? Now we are printing some bearish divergences on the chart. So as we're starting to chop with overlap, remember that's that buying exhaustion that we see, those channels that we see. We're starting to see exhaustion. We saw our initial move up. Now we're starting to see some exhaustion here. We are forming some bear dips. Lower highs here, lower highs here, higher highs here, right? So bear divs are starting to form on the 12-minute. 5-minute, bear divs starting to form. Money flow is topped out, starting to come down. Bear divs on NAMI. We also have money flow bear divs on NAMI. So what this tells me is that, yes, we could see a a pullback from where we're at now. But if we're going to pull back, remember that VWAP flipped to support earlier today. I talked about it in the Telegram. If we flip the VWAP to support, I expect to move up to 65K. Well, with the VWAP now flipping to support immediately after backtesting it, we can see now if we come down to the VWAP, I would expect a flip, a higher time frame test of that VWAP and a flip to support to continue up to 65K. We can also pull our local Fibonacci retracement from the lows of today to the current highs that we just formed. Let's look at where that golden pocket's coming in quite a bit lower. I am not a financial advisor. I cannot tell you what to do with that trade. What I can suggest is that if you're going to be moving your stop loss to try to not get stopped out, you're not doing proper risk management in your trading. And I would suggest that you have a plan before you enter that trade. Like, what was the reason you entered at $64,400? If you didn't have a good reason to enter, you just saw it slowing down and you said, oh, I think it's going to roll over. Okay, what's your invalidation then? Is your invalidation, now I get, if you shorted at 64.4 and your stop is above this local high rate here, or maybe this $65,000 high, and you're targeting taking out the lows again. Okay, maybe you're looking at that, but you cannot change that stop loss so that you don't get stopped out, because then you're risking too much. I mean, you can do it. It's not the proper way to perform risk management in trading. So I'm sorry for I'm being harsh on you here, if I'm being harsh on you, but if you really want to be long-term successful at this, you really have to be strict in your risk management here. I'm telling you guys, risk management is probably the most key thing to trading. You know, you can win. One of my mentors, Bitcoin Hyper, won 46 trades in a row. On that 47th trade, he was risking way too much money. He liquidated his account. He spent months building that thing up, and in one bad trade, lost it all because his risk management wasn't on point. And that's happened to me multiple times, guys. I have had to learn that the hard way. And once you finally start to learn it through the pain of experience, that's when you'll start to learn that discipline. So don't let that happen to you. If you have people, you know, traders out there that have experienced that are warning against it, you know, I understand some of you might have to still learn that through experience, but at least try to use good risk management, at least try to be proper with that, I guess I would say. All right, let's see. Very interesting about Coinbase 786. Yeah, that's right, Jason. On Coinbase, we did not hit that 786 Fibonacci. And that's another reason why I think we could reject at 65K to come down and hit that again. But if we look at that 786 Fibonacci, man, what is going on here with that? Okay, there. No, we did hit it. This is Coinbase. So from those lows there, let me make sure this is not on. Okay, that should not be on log scale because that's not a 100% pump to the upside. 62,618 is where it's looking right now, unless I am pulling this wrong. Let me make sure my, yeah. 62,618. Okay, that's, I was wondering what was going on there. So Coinbase does look like it hit it, Jason. I'm not sure. Earlier in the stream, I know I pulled a fib. Maybe I pulled that one wrong at 62.2. But like that is where we hit it. And that's where we saw finally the bounces once we actually hit the 786. It wasn't the daily level that was in there that bounced us. It wasn't the point of control at 63,150. It was finally hitting that 786, which with the liquidity grab, which gave us the nice move up that we're seeing right now. Travie Trades, welcome in, man. A guy in a hat, welcome in as well. What do you think about Ferrari race stock? We'll look at some altcoins and we'll look at some stocks in just a bit here, but I want to keep an eye on Bitcoin for right now. I want to see what's going to happen here coming up very locally. We can dive in and look at our order flow to see if we're seeing anything here. Guys, I do not like this drop in open interest that we're starting to see right now. I would have rather continued to see that local bullish absorption play out, because here we are on the 5-minute chart and with aggregated open interest. But earlier today, we were seeing some nice bullish absorption, higher lows in the price action. We were seeing lower lows. Now this wonky crap in here, but overall we were kind of seeing some lower lows come in, or I guess they were equal lows, not quite lower lows there. And we were seeing some, at least a decent steady rise in open interest. But this drop here, when you see a prolonged drop in open interest, and now our open interest is even below where the lows from today were, so we cannot say there's bullish absorption locally anymore. Unfortunately, because if we would have had some local bullish absorption, that would have at least gave us a high probability of that move up to 65K. So we are seeing some concerning signs here. We're seeing the bearish divergences on the 12-minute, the 5-minute. Let's see if we're seeing it on the 30-minute or the 24-minute. Let's go to the 24-minute. 24 NAMI is showing those bear divs, higher highs, lower highs, and our money flow has finally started to curve over. But Market Cipher B, look at how well that money flow is just about to cross into the green. If we zoom out onto some of the more intermediate time frames here, 1 hour chart, money flow starting to curve up, and we did see the bull divs. We saw multiple drives of bull div. So yes, we have low time frame bear divs coming in, but it's going up against intermediate time frame bull divs and decent money flow. Money flow is finally starting to bottom on NAMI and Market Cipher B here. So I would at least expect to move up to 65K to that golden pocket. If we roll over now, unfortunately, it happens. You know, what I'll do for me personally, I do still have my stop below today's low, but I would probably, if we lose our local golden pocket, I would probably just pull 50% out and let the rest get stopped out just to cover fees. Because if we're going to continue in this bearish of a trend and not even be able to break local market structure, you know, from yesterday, let's say lower low, lower high, lower low, lower high, lower low, you know, we can't even break 65K, then I would probably say it's going to roll over and continue. And remember, our overall bigger bias, guys, is Sunday, we lost the range, our 3-week long range. We lost the range with a volume imbalance candle to the downside. This range rate, this imbalance candle here, high volume coming in on the final dump and losing of that range. We closed the daily candle below the value area low, which was our first sign of major weakness that we could actually roll over to take 60K sooner rather than later. But this is our last hope, right? This was our box we've been looking at for 2 weeks. And now that we've formed a trend on the way down to that support level, it does suggest we could get another move up before seeing that move back down. So scalp long against your hedge shorts, or, you know, hedge long against your shorts that you have, and see how it plays out. And this is where sometimes you have to sit at the charts or babysit your trades a little bit. But once you get that TP1, move that stop to break even, lock it in, and then you have risk-free trades. You can kind of go off and set alerts on the chart, go off and enjoy your day. And then, or, you know, look at other trades. On Solana, I'm still short from the bearish backtest of the value area low yesterday. I did TP1 upon taking out the lows of Sunday. I TP2'd in this golden pocket, and I also had a long position. I am long from 76.54. I think it was 76.54, something like that. I'm long from right in this area because that was our SFP. Let me zoom out onto the 4-hour chart here. If we look at, unlike Bitcoin, Solana did see that 3-wave corrective move, making a higher high, taking out our range liquidity into our 618 Fibonacci, trend-based Fibonacci extinction, which is the minimum target for a 3-wave zigzag correction. The common targets are between the 1-to-1 and the 1.236, but your minimum target is that 618 Fibonacci extinction. And then we started to break market structure bearishly. We're continuing, but seeing that if you pull a golden pocket from your range lows to your range highs, that macro golden pocket at 76,000 or 76 to 75 has not been tapped yet. Seeing that we have some internal liquidity right into that golden pocket, I told you guys that this short here, hedge long, just in case, right? All right, let me check the chat here. Thank you guys all for joining. Man, Jason, you caught that 786 long too. You know, one thing you guys can count on, Jason is the best sniper I know. His stop losses are so tight. It's incredible. Every single trade. Dad87, welcome in. Thank you for the TA. I took also the long. A quick question. How did you get that great entry 62.6? Well, I was looking at with high probability that we were going to bounce from here because we were forming those bull divs, right? So in some ways I pulled the trigger a bit early. I do have to say I pulled the trigger a bit early on this. Our low from last night, and this happened before I went to bed last night. I went to bed a little bit late because we were coming down to this support as I was getting ready for bed. So I stayed up a little bit later. And we were also on Solana coming down into that golden pocket last night. But we chopped kind of sideways as I slept last night. And then this morning, early in the morning for me, we came down, we grabbed the liquidity of that low, and we hit the 786 and started to bounce. And so I said, you know what? We see the bull divs locally. We see the bull divs on the 1 hour, the 2 hour. Money flow looked really, really good. So I said, as soon as we started to bounce from the 786, I just marketed in. I didn't even wait for the reclaim of this low. Which, by the way, guys, that's not a good practice. And I do not recommend you make that mistake that I made. I recommend you wait until we pierce below the level, reclaim the level, and close like a 5-minute candle above the level, and then you enter. Now, I had some pretty high probability on this just because we started to see that sideways chop at the bottom of our channel within our support box for about, 12 hours or so. We started to chop sideways. We had the bull divs printing on the chart, money flow nicely coming up here. And so for me, I was confident enough. And you got to remember, I'm also short. I'm short from way, way higher in this range. And I also on MEXC took a short from $66,100 the other day, even though it was a very small trade for me. So I was okay, looking for a hedge here, and I was okay getting stopped out and maybe retrying again if it happened again. But good question, Dad87. I would recommend you wait for the pierce above and the reclaim and a close. So I know a lot of you guys got in at like 62.8, 62.9, or even some of you guys said 63 in the Telegram. Really awesome that you guys got such good entries, and I think you're doing great there. That's proper trading, and you guys should be proud that you were able to get in. You were able to recognize that, get in. I did lay this out to you guys in yesterday's video that I would be looking for a scalp long from this area based off the bull divs we were already seeing yesterday when I made the video around market close yesterday. So yeah, 68 is the CME gap. Okay. We also have anchored VWAP at 65K that is coming from the 69K. Okay, let's check that out. We have an anchored VWAP from the weekend high. Okay, very nice. Thank you for that. Dad87, good catch there. Anchored VWAP, guys. So in our local trend, since the weekend, since Saturday, we have been in a downtrend, right? The last time we came up to that anchored VWAP, what happened? You rejected. That was also the bearish backtest of the value area low, meaning that if you reject on your bearish volume trend resistance, you expect to continue that trend. So we rejected the VWAP. You expect to continue that trend. You expect to take out these lows. Also because it was the value area low. But if we come up there again and we reject again, you would expect to drop and continue the trend to take out today's lows. That would be a high probability. So we can watch that 65K level. It's starting to look like a lot of confluence is coming in there. Some nice juice for a potential rejection. Samuel S., welcome in, man. Thank you so much for being here. Thank you for modding for me. Guys, please hit the like button. If you got any sort of insight into the market from this live stream today so far, please hit the like button for me. Also, I do want to take a second real quick to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses paid out in real Bitcoin. And that depends on how much volume you move in the futures markets. And they're offering some of the best initial deposit bonuses I've seen of any exchange out there. For instance, if you deposit $100, you can get a 50% deposit bonus. They're doing 20% deposit bonuses up to $1,000, and they're doing 10% deposit bonuses up to $20,000, guys. So you can get $2,000 bonus off a $20,000 deposit. Really, really great incentives there for you to join. I have also partnered with BYDFI to create that Telegram community where I let you guys know this morning I was looking for a move up to 65K, let you guys know about the Solana short yesterday, and let you guys know about the Solana long last night. If you're interested in joining that Telegram, it is free. All you have to do to sign up is to join BYDFI using my affiliate link and then deposit $100 into the exchange. Now, that $100 is your money to trade with. You're not paying me that. It's just you're depositing on the exchange in hopes that you will try out the exchange and like it and stay on the exchange. You will get the 20% discounts on trading fees. And if you do KYC, you can get the 50% deposit bonus there. But once you've done that, once you've signed up with the affiliate link and deposited the $100, there is a Telegram link in the description of this video. Click that Telegram link, and in the Telegram verified channel, type in /verify and then your BYDFI user ID, which is going to be right up here. It's going to be a string of letters and numbers probably for you guys. But /verify in your user ID, and then you'll automatically be in the Telegram. And once you're in, guys. Now that might be changing in the next few months here. I told you guys I'm looking at opening up a Discord, and also the structure with BYDFI might be changing in the next few weeks. So I suggest you take advantage of that while you can. All right, second partner of the channel is going to be NAMI Trading. And NAMI is this momentum and money flow indicator that you see on the bottom of your screen here. Really, really great tool. I use it for my entry and exit confirmations on trades. So, you know, first off, I always say price action first, indicator second. So first we mark out our levels of support and resistance based off technical things, you know, technical things on the chart. I know things is the proper professional word, right? But anyways, you mark out your levels of support and resistance. And then once we come down to that area, I'm going to be looking at NAMI to see if we're confirming bull divs, to see if money flow is coming up. And if I see the proper confirmations, that's when I'll actually enter the trade. And NAMI has been tremendously helpful in helping me stay out of bad trades and get into highly probable winning trades. For me, it paid for itself almost immediately. I did partner with NAMI to get you guys 50% off. So if you're interested in purchasing NAMI, use the affiliate link in the description and then use code DIVINE50 and you can get 50% off of that. The next partner of the exchange is another non-KYC partner. It is going to be Blowfin. Blowfin is partnered recently with Divine Hood Trading, and if you guys are interested, you guys can sign up with Blowfin here. They're offering some pretty good initial deposit bonuses. For instance, if you deposit $10,000, you can get a $1,000 future bonus. And they're offering a $10 voucher for the first 300 users and VIP1 for 30 days. So if you're interested, Blowfin's another non-KYC exchange I got for you guys. So I got 2 non-KYC exchanges, and then I'm also partnered with 2 KYC exchanges. So MEXC and Bybit. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC's offering that 10% initial deposit bonus up to $1,000. All right, guys, that's it. Let's get back to the TA here. Looks like Bitcoin is continuing to try to push up here. Now, I like money flow on Market Cypher still looks pretty good here. I am getting a bit concerned on NAMI about seeing this bear div with money flow about to cross into the red. But let's see if we at least can't continue up to that 65K golden pocket. I'm going to throw that on the charts here. Yeah, I mean, that's such nice confluence, guys. You can see we have that rejection from yesterday, that SFP at pretty much 65K, right into that golden pocket, right into that anchored VWAP. So I'm going to set an alert here. We'll set an alert potential, and I'm saying SFP short, but really it's more of a TP zone for me, a TP1 zone. And we can move on to some of the stuff, but oh man, it's so awesome. Jason, thank you so much for being in here. RPink, thank you so much for posting those links in the chat for me. Really appreciate that. And Mark Lowe, thank you, man. Thank you for the comment. I'm glad you learned something. I know you said it was your first time in here, so I hope you like it. If you do, please subscribe to the channel. Please hit the like button for me. And I hope you come back and be part of the community. We really are building a great community here. And we have great mods in here, really nice, great mods, really nice seasoned traders in here as well. So, you know, we have the range. We have seasoned up to the newer traders in here. We have some, I wouldn't call them whales, but let's say like sharks or fish, all the way to minnows. And that's okay, you know. All right, let me scroll up in the chat just a little bit here and see what you guys are saying. I figured out Jason is in Mexico on vacation. He's fighting cartel members. Well, he's definitely somewhere very nice. I saw that. He's looking like he's enjoying life, and I'm happy for him, man. Jason works so hard that he does need to enjoy. But you guys, look at this. When I'm on vacation, like you guys saw, I went to Florida a few months ago. You won't hear from me. I'm on vacation. Like I'll look at the charts, but I'm not like taking the time to post too much. Jason is so committed to his community, to YouTube and everything, that he's posting videos every day while on vacation. So God, the guy's got such a great work ethic, such a great, you know, he really cares for his people. So awesome, Jason. It's so cool to have you in here, man. There's a chance that we reject from the current level. Yes, there is, Mach HK. And Oh, it's the weekly VWAP. Okay. Yeah, weekly VWAP. We are seeing some bear divs on the chart. If we do start to roll over, I'll consider taking some profit and moving that stop loss up. But let's see. We haven't really, we still haven't broken market structure bearishly yet. You know, we're still getting like higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So until we break market structure, I'm not too concerned. But if we do start to break market structure, I'll start to think about taking some profits. Oh, yeah. And Jason, I heard one of your chickens died, man. I'm sorry for that. They force you to have good risk management. Yes. I've taken more loss on longs in big down momentum, but it's now covering because of risk management. Yeah. That is something. The thing is, when you dump, so shorts can be so nice because when it dumps, those profits come in very quick and fast. But on the other hand, if you're trying to long that falling knife, you can really lose a lot of money really fast if you're not using good risk management. So that's why I also tend to be a little bit more conservative, guys, and I wait for it to slow down a bit and start to range sideways and see some sign of strength or some sign of at least exhaustion in the selling before I'm trying to catch a knife. That's also why I don't have as good an entries sometimes as some of the, like Jason's super good at catching knives. He's been doing it successfully for years. I tend to be a bit more conservative in that capacity. Can we capitulate already? Man, I think it's coming in the next couple weeks, Samuel S. I do think we are coming down to $57,000, $58,000, which, by the way, guys, I am telling you right now, I will be looking for massive swing long opportunities at $57,000 to $58,000. We have that naked monthly point of control there. We at 58, pretty much at 57,900. We have our anchored VWAP on Coinbase from the bear market lows coming in at $57,000. We have a weekly level, a daily level. Hold on, am I mixing this up? I think that's that's Ethereum's low that we have weekly and a daily at. This area though, high time frame volume support level, right? Because you got a naked monthly point of control there, but it's also your anchored VWAP from the bear market low. So your overall bull market trend. If we're going to maintain even a decent bounce, you would expect from the volume trend of the bull market, right? This is a anchored VWAP, volume weighted average price. So it's taking the average volume of the candles, not based off the price more, but more based off the volume. And if you come down to that area, you expect at least some sort of bounce, even if the momentum is going to continue bearish in a bear market. Just like when, we have this bearish momentum here, you come up to it, you reject, you continue the momentum. So I would expect that we're at least going to get some sort of reaction from that $57,000 area. But we'll have to see. I do expect this to come down to make a new low, though. And remember, guys, we're looking at the pitchfork midline as well, pretty much in that same area. And this pitchfork has been so highly respected for all of 2025. I know I showed you guys this the other day, but your distribution range at the top, you bounce at 80.5K. You try to break above the band. You can't. So if we do fall down to that like 57K area, that midline, I really do think we're going to get some sort of bounce in that $57,000, $58,000. Now, if we start to lose that, I covered this in yesterday's video, but $54,000 is going to be the bottom, our value area low of if we combined 2024's range and 2025's range together now that we've found reacceptance back within the 2024 range, we can take these two ranges and we can combine it into a bigger range. And the value area low of that range is going to be coming in right at the bottom of our pitchfork, of our multi-cycle pitchfork, right? This pitchfork was pulled from 2020, COVID lows. And so if we're looking at, we rejected from the midline, fell through the band, we might come to the bottom and see a bounce at the bottom. And if we're seeing daily bullish divergences on the chart, as we're seeing that, multiple drives of bull div on NAMI, man, it's just going to look so juicy for a swing long. So 57 and then 54. It's really like 53.6, but yeah. This dump is really not convincing at all. Well, are you talking about the local dump of the last 2 days, Lost X? And by the way, welcome in, Lost X. Good to see you in here, man. Decrypto, welcome in as well. Liam, DJ11, welcome in. Let's see. Yeah, I get what you're saying. It's not convincing. What is concerning to me, if you want to be a bear, is the descending channel. Because when you see a aggressive dump, let me just get back to the Coinbase chart and let me hide some of this local stuff real quick. When you see that aggressive drop, we got that a few Thursdays ago, almost 3 weeks ago, we got that really aggressive drop. You get that dead cat bounce, 3-wave corrective move. Okay, cool. But then from there, we've started this descending channel with a lot of kind of algo trading in here, a lot of bot trading in here, a lot of bot trading in here, you know, bot trading in here. So this whole thing just looks corrective to me, like this channel definitely looks like corrective price action. It doesn't look like a 1, 2, 1, 2, 1, 2, 3, you know, like something like that, like the start of an impulse. So for me, it is likely that we're at least going to see a little bit of a rally before seeing that big dump and potentially even coming up to take out the channel highs before seeing that big dump. But we have about 10 days left of this range before it starts to invalidate our impulse from 98K down. So remember, this is our wave 1 in here. Wave 1, our running flat in a wave 2, our big wave 3. This is all, whatever happens in here is a wave 4 before seeing a 5th and final wave to the downside within our extended 5th wave. Now, the thing is, guys, even within that extended 5th wave, it is just part of the larger daily impulse from the all-time high. And remember, we're looking at this being from the all-time high to October 10th lows is a wave 1. We have our flat correction in a wave 2. We have our dump in a wave 3 from 116 to 80.5. We have our WXY correction in a wave 4, and then this is all an extended 5th wave here. But the thing is, this move within the 5th wave, 1, 2, 3, we're in the 4 now, so we need one more low. The one more low we get will not only finish the dump, the impulse from $98,000 down, but it will also finish the impulse from the all-time high down. And that is when you could see significant rallies. Significant, guys. And that is why I am looking for those swing longs on the next low. Whether it's going to be an SFP of that low, or we're going to drop to 57, or we're going to drop to 54. But the next major low we see, I will be looking, and I want to see some nice bull divs coming in on like the daily and the 12-hour and the 4-hour. But I want to see a potential swing long opportunity. I do see a potential swing long opportunity coming in. Yeah. All right. Also look in the midst of the 1 hour, 4 hour. Also we have in midst of a 1 hour, 4 hour order block. Okay. Are you talking about right now? We're at that order block. Let's see, 4 hour chart. Yeah. That order block right there. Yeah, I see that. Okay. So we do have that little 4 hour order block right here. So we've come up, we filled that order block. That's kind of where we're finding that rejection at 64K. Very nice catch there. Very nice catch, Samuel Brandstedler. All right. Where do you think this relief pump is going to? Well, I explained that, Nick Tooney. I explained that at the beginning of the stream, but the first level I'll be watching is that 65K area. Now, I understand that's not big of a rally. That's not that big of a rally, but at 65K, sorry, the rejection from yesterday's high down, it's a retracement to the golden pocket. And the reason why is because we are still seeing some bearish CVD divergences on the chart, so we could continue the bearish price action. But on the, I explained it just maybe 30 minutes ago. If you go back and watch the stream from 30 minutes ago, the two main levels to be watching are 68K and 69K. So at 68K, we have a naked daily point of control in confluence with a golden pocket. And at 69K, we have the swing failure pattern of the weekend highs into the point of control, into the top of your channel, and we are bouncing from the bottom of the channel, so there is a way we can move to the top. And there is a daily level up there as well. So at 69K, I'll really be looking for shorts, though, guys. 69K is a really good level to be looking for some shorts. Tomorrow, we have NVIDIA positive news. I expect a little pump and then sell the news dump. Okay. All right. Well, we'll have to keep an eye on that. Will you be doing any spot trading holding at lower levels? Yeah, I already started buying some spot. Actually, I bought some $67,500. I bought some spot on Bitcoin at 67,500 and at 70,000 something. I did buy some Ethereum on spot. I'm underwater on that. Or yeah, I think at 2160, I bought some Ethereum at 2160. I will buy some more Ethereum around 1600 to 1570. And I bought some Solana. I bought some Injective. And I think Sui, I think it was. Yeah, I am starting to spot buy now. I'm starting to look at some spot buys. But if Bitcoin gets down to 57K, I'll look to probably buy a little bit more. But really, if we start breaking, man, you know, if we start breaking into the 40s, I'm going to really start to look at dollar cost averaging on Bitcoin. Yes. Okay. Aerodrome Finance, double bottom on the 1 day. Okay, we'll look at Aerodrome. We also had to look at another stock. I can't remember what that was. Guys, if you want me to look at an altcoin, please post it in the chat, and we'll start to look at some of the altcoins. Yeah, Jason's live streaming out in the sun, man. And that guy's he's ripped. Quiles, welcome in, man. Thank you so much for the super chat, and thank you for being here. I don't know how you do it. I would just be making up names. Some are so hard to read. Yeah, dude, our pink, yeah, it's tough, huh? Chainlink, yes. Okay, actually, I'm going to cover Chainlink right now because that was one of the ones I didn't cover in yesterday's video. Overall, guys, Chainlink has also lost the value area low of the range. And we also, after losing it, let me zoom in on this. Yesterday, after losing it, we back tested it. It was also where our VWAP was. Actually, that was Monday. Yeah, yesterday. And we dumped down. So once you lose the VWAP, this was a bit more, a little bit harder to trade because first off, Chainlink did see that 3-wave corrective move where we did take out the range highs, right? We took out the range highs. Unlike Bitcoin, unlike Ethereum, Chainlink saw that 3-wave corrective move right into the 618 Fibonacci extinction as well. And just like Solana, and we rejected and we fell back. So you can see here though, look how nice Chainlink is volume profile trading, right? We had the initial dump on that Thursday a couple weeks ago, 3 weeks ago. We came back up, and this is kind of where we formed our value area high of our range based off of all these highs in here. Value area high, we formed kind of this range in here, but we couldn't get back above it. We dropped down. And then really after this area and this area is when our volume profile started to mature. So we broke above the PLC. We were able to break above the value area high. We back tested it locally. And because we bounced locally here, you expected to make new highs. But that new high that we made, there was bear divs on the chart and it was hitting that 0.618 Fibonacci trend-based Fibonacci extinction. Or if you guys know the inside joke, Fibonacci extinction. But you can see here, actually, did we hit it? Let me take that there. Yeah, it barely frame ran it, but you came pretty much up to that area there. And then we fell back inside the range. This was the hard part here because we bounced bullishly immediately with this guy here. We made a new high, but we had bear divs. But once you fall back inside the chart with a volume candle, you're finding reacceptance back within. Backtest value area high, reject. Backtest value area high, reject. Backtest value area high, reject. And then that's when you, after seeing a few rejections of the value area high, now you're going to rotate down to value area low. We rotated down to value area low. We bounced from value area low. Okay, so you're just pretty much trading the range, right? You're seeing that rotation of the range. And what is important in sideways ranges, guys? Volume and liquidity. Well, this is a volume support, value area low. So you bounce from value area low. You make another attempt to come up to value area high. You can see locally we were able to flip that PLC to support, value area high. But then we saw a liquidity grab of those 3 semi-equal highs. And I talked about this. That was at $9. If you guys remember, I was looking at that before it happened. It was our 786 at 904. And you saw the SFP of these 3 semi-equal highs at $9 pretty much into your 786. You saw the bear divs up here. Higher highs, lower highs, bear divs, money flow coming out, money flow, bear divs. And then we pretty much lost the POC. So once you lose the POC, you expect another rotation to value area low. So we lost POC, back tested. But what was confusing on Sunday, you dumped below the value area low, but you were able to reclaim it pretty much immediately on Monday morning. So it was a bit aggressive here. This last dump was a bit aggressive, but you did just pretty much fill in the fair value gap. You can see where your prior lows were. You pretty much rejected from your prior lows, filled in that fair value gap. If you look on like the 2-hour or 4-hour time frame, that was the fair value gap there. So you filled that fair value gap of this big imbalance candle. And then you start to drop and lose the value area low again. But then we back tested it bearishly and rejected. So you expect to make new lows. Now, what we did finally come do is our prior lows. We finally came down and took out those prior lows. It wasn't a clean swing failure pattern, though. You can see multiple wicks yesterday, multiple wicks. So for me, this was a lot harder to trade. And that's why I was looking at Bitcoin and Solana rather than Chainlink, because Chainlink has been kind of crappy here. But what I would say for Chainlink is, yes, this is just a sideways range. I would look at trading that sideways range. Also, we can be looking at that larger 3-wave corrective move. 3-wave corrective move. If we're going to see a 3-wave corrective move, then we do have a daily level that's down below us. Let's see, where was that daily level? I mean, I would just be trading this range, but the daily level on Chainlink is coming in at 790. So 790 could be a decent support level if we look at our Fibonacci. And we go to our golden pocket. You can see that golden pocket is going to be right at that daily level. So at like 790, 791 would be a potential area where I would be interested in taking another scalp long opportunity on Chainlink. But I do expect Chainlink probably to break down and take out the low. If Bitcoin's going to break down to take out its 60K lows, I expect Chainlink to come down to our previous range point of control at 703 and take that out. But for now, time attack, it's a bit confusing here as far as you're just trading this sideways range. This is exhaustion that we're starting to see, though, because we saw this very aggressive downtrend, very aggressive trend. Now it's starting to weaken, right? You're starting to see at least the selling exhaustion in here. So that's our first good sign. We're waiting for that range. And as far as high time frame accumulation or high time frame, like waiting for a sign of strength, this is at least our first sign of strength that we're starting to go sideways now rather than straight down. So what I would look for is, if you're looking for potential longs and even swing longs, wait till these important resistances within this little range and attempt to take a long with the mentality at first that it's going to be a scalp or day trade, but in the back of your mind that it could turn into a swing trade. Now, what I would say here is we're still below the value area low of this range. So I would recommend that if we saw immediate, let me just go back into the 1-hour chart. We saw, upon losing it yesterday, the immediate rejection. We made new lows. Now I would be watching for another higher time frame rejection. If you reject there again, I would at least expect to come down to this 791 area, that golden pocket and that daily level. And that is where your real support within the range is anyways. So if we're forming these bull divs, as we're coming down to that area, so maybe we're going to do something like this and see 1, 2, 3 drives of bull div coming into that 790 to like 797 golden pocket daily level. That is where I'd be looking for a nice long on this thing. And actually what we'll do here is we'll set an alert on this daily, long if divs, long if divs. But I would want to see this chop continue until we get down there, because we actually haven't got down there yet. Yes, we are taking out your internal lows, but it's not a clean swing failure pattern. And I don't like how it's not a clean swing failure pattern. So and especially if we come up and reject, then I would expect to come down. Now, if you can get back inside of the volume profile, that's a different story. You get back inside of it, I would be probably pulling a golden pocket from the Monday highs to the lows today. You could look for moving up to that golden pocket and then hopefully holding, like seeing a little pullback from the golden pocket, but holding that value area low as support. And if you do, then you can look at now some of your bigger levels within that range. So we can pull our naked daily points of control in here. Ooh, no. All right, let's look naked weeklies. You have this naked weekly from last week. And then I would simply pull our golden pocket from the range highs to those new lows that we got. All right, so a couple levels to be looking at. I mean, I would say, and let's put this to our 786 on there as well, because that's going to be at the value area high. So we have a couple key confluences already. Right at your range point of control, you have your golden pocket. That is an area I would be watching. Even better in some ways is right on top of the value area high is your 786 Fibonacci. And you could come up a little bit further to wick this high. So I would say the next area of resistance would be this box here. Those are the two areas I'd be looking at. And of course, you're going to have to pay attention to the naked weekly in between them. But that's where I would start looking if you can get back inside the volume profile. Because remember, if you can get back inside of it, then you have a high likelihood of at least moving up to the POC. And it's just a sideways range, right? So until we're back above this value area low, you're showing weakness. But at least the weakness, it started out with the aggressive dump, followed by a dead cat bounce. And now we're at least starting to see some selling exhaustion by this overlapping trend that we're seeing here. So if this overlapping stuff continues until you get to your support and you see bull divs between all this overlap, that is when you can look for a long. As far as the bigger spot trading goes, man, I think that we could be seeing that drop to come down to take out into your, this was your accumulation range in here. And we have not hit the POC. We just barely front ran the POC of that accumulation range. And that is where a lot of those big buyers will buy at fair value of the accumulation. So I would be looking, if you do make one more low, you can see I have an alert set there already. 703.6. That is where I would really start to look for some spot buys on this thing. Of course, I've already bought some spot on this, but just an example there. All right, TRX, Cosmos, Turbo, Gold, Aerodrome, Hype. Jesus Save 77, welcome in. Thank you so much for being here. God bless you. Really appreciate seeing you in here. Okay, let me just check Bitcoin for 30 seconds, and then we'll go into some of those altcoins here. I just want to see what's going on with this. All right, I see, guys, this is why I'm looking for a potential, the title was bull trap or reversal, but I am looking for a potential bull trap coming in and seeing a rollover, continuing the bearish market structure, just like we were talking about on Chainlink. We are starting to see that overlap come in here, but we could still see overlap continuing, kind of now a new descending channel on lower time frames. Actually, we can pull that descending channel. Let me just get to the 15. So from yesterday's high, actually, I'll pull it from the lows, from the Sunday low to the initial low yesterday, and then up to the high. Okay, that's another reason why we're finding resistance where we're at. If we can break out of this channel, let's just make that pink so you guys can see that. So it's kind of our exhaustive trend that we're seeing. Really struggling to break out of this. Okay, let's go into, I think, the first arrow. And I don't know if I've looked at this in quite some time. Man, it's been a while. So let's just do this. Let me just double check this. All right, I will remove the drawings. And what I would say right away is we have our big daily range, right? Pulling that volume profile, I'd even pull it from like this sideways here. That's your big daily range. We're below the value area low. We've lost it. And let me just check one thing at the end of the impulse. Yeah, this is where it's most respected. So you've lost the value area low. I mean, you can see you had that failed auction, broke back inside, back tested it bearishly, rejected. You could not hold your value area low, so you lost it. But we are coming to take out your range lows. And this is the thing. If your value area low doesn't hold, you have a very high probability of taking out your range lows. Well, just today, actually just the past 3 days or so, 3-4 days, we're now coming down and taking out these lows, and we're trying to hold it here. So this is your range you really want to focus on, because we took out the liquidity of those lows. If we can start to range sideways here for a bit, break some market structure, you could at least see a move to back test the value area low. If you see another rejection, though, of the if you do come up and reject that value area low, I would expect a bigger breakdown on this thing. And unfortunately, what's scary here is, let me just go to the weekly. This is a giant fair value gap on the weekly time frame. If you start to fall, if you do not hold the low that we're at right now, that range low, you have a high probability of falling pretty aggressively to fill that fair value gap on the weekly time frame. Look at this fair value gap all the way down. This would be aggressive. Quick move up means quick move down. Now, let's look at our naked monthly points of controls. No naked monthlies in there. Let's see if we see a naked weekly. If we don't, it might not go back that far either, but unfortunately it doesn't. What I would say is it's crucial to hold the lows that we're at right now. Do we see bull divs on the way down? Market Cipher is not showing them, but we did get the big green dot on the daily. But NAMI is showing the bull divs between the two major daily lows here. Bull divs, money flow starting to curve up here. What now I would look at, weekly bull divs, not daily, weekly bull divs. And then if we look on the daily time frame, do we see bull divs on the daily? Yeah, we do. We see bull divs on Market Cipher B. We see bull divs on NAMI as well. And we see money flow bull divs. And your money flow is bottomed out and is starting to curve to the upside. So that is actually a good sign that we could maybe hold this low. So if you're looking to buy this spot, starting to dollar cost average in this range, and by the way, this is not financial advice. I do not give financial advice on this channel. But as far as technicals go, and like education is, it wouldn't be bad to start dollar cost averaging in here, and maybe your stop loss is going to go below that current range low, you know, to get stopped out. Because if you do start to lose these range lows here, you have a high likelihood of dropping down to like 12 cents, which is a pretty aggressive drop, you know, 50% loss or more. But you can now zoom in and look at this range of the past few days and play this range until it breaks. If you really want to be certain, you pull this range. Okay, we're at the value area high of the range right now. So obviously we're not buying the value area high, which is considered overvalued within this small range. So now I would be waiting. And also you still don't really have too much of bullish market structure. Locally we do now, because you have your high, low, lower high, lower low, lower high, lower low, lower high, lower low. By taking out this lower high, you've finally broken market structure bullishly. So you have your first sign of strength on low time frames by breaking that 31.2. Okay, but now we're rejecting from the value area high. So if we do come back down to the POC, which happens to be where your VWAP is for the day, that could be an area where you bounce and attempt to take out your range highs. You can see we have these range highs, semi-equal range highs, that look like they're begging to be taken because we finally took out your range lows. You can see that very nice SFP of the range low. You make new highs in the range by taking out this range high. Now we've taken out all these internal lows all in here, and now we're pushing up. I also have to say that you are seeing some pretty nice bull divs in this little guy here. You have the bull divs, you have the bull divs that are playing out. So what I would recommend now that we've broken market structure bullishly by taking out these highs or these lower highs, you could now pull your Fibonacci from the low to the high that we just made earlier today. And I would be looking at that golden pocket. I would be looking at any naked daily points of control. And I would even throw that 786 on because it's going to be at the bottom. It's going to be at your value area low. So that 30 cent area, very nice confluence with the bottom of the range. Because if you're going to reject from the top and you're going to lose this POC, then you are going to move down to the 786. And then we can look at our naked daily points of control within this little range. And yeah, you do have a nice naked daily around there. So what I would say here, if you're interested in buying Aerodrome on spot, if you want to start nibbling at, and this is not financial advice, this is in any way, this is just technical indicators of what I would do if I was considering buying this now that we're starting to form a bottoming sideways range. Now that our big dumpage has ended and we're starting to form a sideways range, I would look at starting to nibble at the POC. Actually, Golden Pocket would even be better because you have this order block there. Let's see if it's on the 1 hour chart. Do we have a good 1 hour? Yeah. You see this 1 hour order block, a bunch of green candles, one red candle, and a bunch more green candles. So this 1 hour order block, you can see it's right into your Golden Pocket. So my first level, because we broke market structure bullishly, now a higher low could be expected. If we're going to see that break, you have the higher high, higher low, and then you could break this up in a wave 3 or even break it up in a ABC. A, B often retraces to Golden Pocket, and a C wave just to take out the range highs. That's still a good long position right there. And then the next level I would be looking at for support. So of course your order block, Golden Pocket, and then the next level I'd be looking at value area low 786 naked daily point of control. Those two boxes there. So 38, 3643, and then this lower box is 3006, 298. Okay, I've replanned my entry after rejection or crosses anchored VWAP, weekly anchored VWAP. Okay, cool, man. Awesome, Sadie. Okay, TRX USD. Let's go to Binance. I think I usually do Binance on this guy. Yeah, unfortunately. All right, let me get rid of this. So clearly this was impulsive price action in here. Impulsive price action, right? Now we have started to go sideways in what looks like could be a sort of triangle in here. And that would be a consolidation continuation pattern, meaning you expect to break this up or have a higher probability to break it up. But you want to look at this range on the daily time frame. So I'd be pulling this range and looking at this range. You're back inside the volume profile. Let me make sure I got this real accurate. I want to do this right from the highs. Yeah, you're back inside the volume profile. You can see kind of broke out, back tested it, came up, probably rejected the 786 or Golden Pocket, attempted to bounce, but you couldn't. You fell back in, you back tested it, you found reacceptance pretty much back inside of it. Another attempt to break it, but you couldn't. So I would be looking at now pulling some levels. Let's pull from the range lows to those highs, those lower highs. And we definitely want to turn, let me just check something here. All right, that's 85% move. I'm going to put this on log scale. It's pretty close to 100%. Yeah, it shifts your Golden Pocket to your proper 61% retracement. And then I want to pull our naked dailies within this guy. All right, it's not going to go back very far. Let's do naked weeklies. Man, okay, that naked weekly is going to be super important because you're going to have a liquidity grab right into a naked weekly point of control. I will say below us, this low liquidity into a golden pocket. So, you know, that SFP here into a golden pocket could be very nice. And if we look at our non-log golden pocket, it's pretty much going to be right at that non-log golden pocket. I would recommend using the log golden pocket for that, though. And then we could look at the naked monthlies within this range. Yeah, unfortunately, there is no naked monthlies below us. But look at, there's also that naked monthly right above those highs. Naked monthly, naked weekly, right there. All right, let's mark out this naked monthly as well, because that's going to be around your golden pocket. And then as far as the lower time frames go on your daily, you have this kind of bottoming range in here. You're finding a bottom. This is your range with a little deviation of the range. So I would pull a volume profile for this little bit of structure. And actually we could pull it even back to like this guy here. Yeah. What I would say about this move up that we're seeing so far, this has a lot of overlap. So let me just go on to the 4 hours so you can see that a little bit better. But you can see how this looks corrective. This doesn't look like impulsive price action so far. There's no big gaps in it, or there's no big, you know, it's a lot of overlap between the highs and the lows. So, you know, a lot of overlap in here. And I would be saying, watch out, because you could, now we're coming down to POC. We're attempting to bounce from POC today. So that means you're likely to work your way up to the value area high. But this entire move up looks corrective so far. So I would be in some ways expecting a lower high before another lower low. And we can pull our channel. Let's pull it from this low. Yeah. So you can see we're even losing the channel, but it's a deviation into your point of control. So right now, if we can get back inside the channel, I would expect to move up to value area high, or even potentially to your higher range value area high at your naked monthly point of control, 29.86. Overall, it doesn't look too bad. Let's go to the weekly time frame, and let me just hide some of this lower time frame stuff. To me, what's a bit bullish is that this initial move down that we saw looks like a three-wave corrective move, and then you broke up. You have overlap between this low and this high here. So you can't say that that's a 1, 2, 3, 4, 5 there. You cannot say that unless you're looking at some sort of contracting diagonal, which could be the case, but it's less likely. Contracting diagonal there is way lower probability. I would be watching this naked weekly point of control, because it's also a naked monthly point of control, and it's right above this liquidity. It's also, it looks like a daily level, or at least a 2-day level of there. Let's see if it's a daily. It's probably a daily as well. Yeah, a 2-day level in there. And then you could pull your golden pocket, of course, from the last daily highs to the daily lows. We'll put that at golden pocket. Yeah, I would definitely be watching this general area for resistance. And then, of course, your naked monthly point of controls are going to be big, guys. This looks corrective, but as long as you're able to get back inside your parallel channel, I would expect this slow grind up to continue, probably up to this larger range value area high, which is right at your naked monthly point of control, 29865. From there, though, be careful, because this could be a continuation of a move down. Okay, I'm not going to spend too much time on each coin because I know we have a lot to cover, and also we do have alerts set on Bitcoin is DT. Let's go to Binance here. Wait. Adam, yeah. What am I? Jeez. Man, that wick literally destroyed everything. It is really bad to see such an aggressive wick down like that. Wait, how do you even get it? Literally went to zero, pretty much. 001. And after you see such an aggressive wick like that, it pretty much destroys the project, destroys all liquidity pools that are inside that project. I would be very, very careful with this, guys, because when you see something like that, it like I said, it completely destroys everything. All right, let's put that on the skiff because that is starting to go sideways. Nope, not useful. All right, you are near your all-time lows, besides the wick, of course, besides the October 10th wick that happened. You are pretty much at your all-time lows on this thing. Do we see bull divs here? I mean, so this wick misses everything up, but you between this low and this low, you are seeing bull divs on the weekly time frame. You can see here, lower lows, higher lows, money flows bottomed out. Bull divs on NAMI, money flows about to cross into the green. So that is nice to see. You have not broken market structure bullishly yet, though, because you have your lows, you have a lower high, lower low, lower high. So maybe you're going to expect one more lower low on the weekly. Don't get too bullish until you start breaking market structure, or start forming a sideways range in here. We can mark out that weekly support level below us. Was it hit? Never mind, it was hit already. So let's get rid of that. But we can mark out that weekly resistance that's above us. I just want to check our monthly real quick. Monthly's been tapped. That monthly fresh up there, but we'll wait to mark that out. It's pretty far away. And so what I would be looking at is your range that's forming after your October 10th crash. This kind of sideways range in here. What I would do is let's pull that original trend channel. Okay, so you see how you were trending down within this channel? You broke out of it, but you rejected. We did come down to the midline of the channel, bounced, was able to hold the channel as support, and we're breaking up here. So, man, the dump that we're seeing in the past few days is really aggressive, and it looks impulsive to me. And because we are making, even within this, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, you could continue down to take out this low here. I would also have to say this does look more three-wave corrective, and now you're starting to impulse down. So be careful because that is starting to impulse down. There is a couple ranges I'd be looking at from the bottom of the channel sideways. So we are coming up to your POC here. It's probably going to be your golden pocket as well. Yeah, golden pocket POC. So you are coming up to some pretty nice support on the daily time frame right now. And then I want to pull one more bigger range from, yeah, in here. Yeah, it's POC of both ranges. Very, very high confluence here, and your value area lows are pretty much the same. So I'm just going to go with the smaller channel because they're pretty much this, or smaller range because it's pretty much the same. And you see you did reject the value area high of this range. So when you reject the value area high, you expect to come to POC. If that doesn't hold, you expect at least to come to value area low. You have some internal liquidity resting there, and a daily level resting there. That's a daily level right there. And of course, you have your daily level resting at the value area high up here. Let's go to the 2-hour chart. Yeah, this is a pretty aggressive downtrend. So what I can see right now from this lower high, this is impulsive for sure. Wave 1, wave 2, you're in your wave 3 right now. So your wave 3 is probably going to end in this area. You're going to get a bounce for a wave 4, and then you might get that wave 5 that comes down to value area low. And you would pretty much just be rotating the volume profile. We can also take that trend-based Fibonacci extinction, highs to lows of 2 to lows of 1 to highs of 2. Turn on that 1.618. All right, so we've already passed the 1.618, so that gives you very high probability that this is an impulse, that this so far is an impulse. I would be looking for a small bounce coming up soon at the golden pocket and the POCs. Remember, it's the POCs of both ranges. Let's look at our naked daily points of control. Do we have a naked daily there? Ouch. We had one that we bounced from yesterday, but only got a small move up to VWAP before dropping. That's not very nice to see, but let's see if we have a naked weekly below us. Yes. Okay. Very nice confluence below us. I'd be looking for your wave 3 to end in this general area that we're coming up into, like around, and I would be specifically watching this naked weekly within it at 196.6. I would expect a bounce from this area, but not much of a bounce. Okay, right? We're looking for, let me just throw on the 2-to-1 Fibonacci. Yeah, 195, 196. This is definitely your area of support in here. And I would even say this is kind of your better area of support to start looking for a bounce. But then you're going to pull your Fibonacci from the highs of wave 3 to wherever those lows of wave 3 are. Right now I'm going to throw them on that naked weekly point of control. We're going to put our wave 4 targets on, and we have to put that based off log scale. I'd be looking for at least a bounce from here to probably come up to here before continuing down. Seeing that 5 wave. 1, 2, 3, 4, 5, something like that, or maybe even coming down to value area low for 5. Money flow does not look good on the 2-hour time frame. It's still kind of aggressively leaving, or looking like it wants to continue to aggressively leave. You don't really have nice bull divs here yet. You're still not down to that level yet, though. So you want to see this start to slow down in here. Yeah, I would like to see that start to slow down because money flow still looks pretty bad. You are starting to develop some 1-hour bull divs. So very nice to see some signs of strength coming in. But as you're coming down to like that 196, 197 to 195, I would say, you want to see some exhaustion coming as you're coming down here. Overall, I do not like the way that this thing is dumped so aggressively and is just continuing to kind of bleed here. You're at all-time lows, so if you're like long-term investor on this thing, I would personally wait for a sign of strength to start investing on spot, but it's not, you're at pretty much the lows. It's just, is this project dead now? This could seriously be dead because of what happened on October 10th, dropping all the way to 0, literally 001. Because of that, it might have ruined all the liquidity pools in the entire project, and it might be completely done for. All right, Cosmos Turbo. We can check Turbo real quick. Oh, and let me check this. Actually, I'm going to go into ZRO real quick. Thank you, Johnny, for the super chat. So ZRO, zero layer. Okay. Yeah, and Mark, thank you for the super chat as well, man. I appreciate you so much. Add the message, Mark. Add the message, and I'll look at it. Or I see it. I just wanted to say thank you for the great content. Well, thank you, Mark. I appreciate you so much for being here. I know it's your first time here, so thank you for your kindness and your support and everything. And I'm glad you're here with us, man. Yeah, right. Lost X. Listen. They're not idiots for looking for stuff at lows. Cosmos Atom was an established project, but that would concern me. The drop that you saw there would concern me. So, I get the mindset. You're trying to invest at all-time lows, but Atom looks pretty dead to me after that. All right, ZRO. I see that you have a couple different, like, your support resistance flip is like this guy right here, right? So you have your range above, your range below. So we kind of have established a new fair value on ZRO in this bottoming layer here. Now, this is clearly impulsive price action to the downside, all of this. So what I would be doing is I would actually be pulling that range from the end of the impulse over, and I'd be looking at this price action. And then even within this range, you can see there's kind of this upper price action above the value area high, and then most of it inside, you even had a little deviation below. What I don't like is rejection, 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 value area high. You keep rejecting that value area high. On the last rejection, you did take some liquidity. Let's see, did you take this high? Double top that high. So that's actually interesting. You now have 3 semi-equal highs. 1, 2, 3. You have really strong liquidity at 260. So just be aware, if you do push up, take that liquidity. Man, I'll be looking for an SFP short if and only if we SFP that. Now that's going to be some time because, obviously we're way down here. I meant to do weekly. This is probably going to close the month. It's not confirmed yet, a monthly resistance, but it's highly likely that we close the monthly candle red. So I'm going to mark it out as a monthly level of resistance. Right now it's monthly open. And we also have that monthly that's pretty much at the weekly down here. So you're seeing some nice confluence between the monthlies and the weeklies. Man, and unfortunately, this volume profile is, it's respected, but I do not like the chop we're seeing right now through the value area low. So what I would be doing is taking this range and focusing on this price action after the October 10th drop. Yeah, and you can see your value area low, your POC are both together down here. This was your second POC or your second most traded volume within that. You can see you lost it, back tested it, rejected, and that's where you form that new monthly and that new weekly. I honestly would be expecting on this thing, and because we, after, almost double taking liquidity of those highs, double topping there, I would expect us to at least come down and take this liquidity below us because you have a double low down at 137.5. But this level, this area down here is a super strong support level. You have your POC value area low, weekly, monthly level down there. There's even a daily level down there. You do have this daily order block. So if you SFP these lows into this daily order block at like 134, that would be nice. But it does look like you're probably, because you rejected this lower high here at the pretty much the second most POC, second most volume traded level, you're likely to continue down, at least to take out these lows. I would look for your naked weekly points of control in here. Yeah, you even have a naked weekly down here. Guys, this level at like 124, 123, super, super strong. 124, let's say. I'm actually going to set an alert on this. Long if divs. Because you're starting to see some selling exhaustion overall. You can see this is starting to get exhausted in here. Could he even pull that channel? Yeah, your midline's down there too. So a lot. You attempted to break out of the channel. You couldn't even grab the liquidity, which kind of sucks. But if you come down here, you could look for a bounce. It might wick a little bit past it to grab these lows as well. But starting to come down into that 124, 123 area is looking pretty good. Overall on ZRO, you are pretty much, you know, only downtrending after the initial first couple months of trading in bullish price action. You've been kind of downtrending. So I have no idea what this project is, but I would be personally looking for, because you did see nice bear divs up here too. Look at higher highs in the price action, lower highs here on the 3-day chart. That's pretty bad. And because you didn't take out this high, you maintain bearish market structure. So you had 3-day bear divs at the highs of the channel with, you know, so I would expect to probably at least come down to the midline, which is that 124, 123 region. It's going to take some time, of course. You're not going to come straight down there. It's going to take some time. You might see a decent scalp long from taking out these double lows at 137.5. But for the most part, I do think you are likely to continue down. If you can take out those lows with an SFP, you will see some nice bull divs on the chart. Not on Market Cipher B, but on NAMI you will. But once again, look at, as you were coming up to these highs, you saw the bear divs on the 3-day, you saw the bear divs on the 1-day, and you see bear divs on money flow. Money flow is about to cross into the red. So for me, it's highly likely this thing continues dumping, at least to take out 137.5. And it will take some time. You know, it's not going to see one big daily candle like that. It's going to slowly grind. You might see a couple daily candles in here, a couple up green candles, and then, you know, some more. I mean, it's just going to be, you know, sideways and down chop, probably until 124, but you might get a small move up from this liquidity grab. Yeah, you could pull a pitchfork in here as well, but the channel is pretty much going to do the same thing as the pitchfork. So you could go from that swing high to the swing low, up to that lower high swing there. And we would want to make this a skiff. Yeah, it's already a skiff. Okay. And yeah, man, actually that I don't even like that. Rejected it at the back test of your pitchfork. I think this thing is going to continue down, guys. Okay, gold, turbo and gold. I'm going to do gold real quick. What am I doing? I'm just so used to typing USD afterwards. All right, well, guys, gold. Here's the thing in gold. I was looking initially at that 3-wave. So we had the big dump down here, and it looked to be a 3-wave corrective move, but it was pretty aggressive. Then we did that 3-wave corrective move up and we rejected from the golden pocket. Remember right here. And then we saw another 3-wave move down. So we could be in a larger WXY correction. 3-wave move up, 3-wave move down. And then if we want to see some sort of 3-wave move up here, overall making a lower high, and you're above the gold. Well, you're kind of rejecting from the golden pocket. Let's see what the daily time frame is. Now you even came above the golden pocket, but here's the thing. You are rejecting from the back test of the pitchfork band, right? On that initial high. What is this, an order block up here? Yeah, that's an order block up there, I think. On that initial high, you rejected from the top of the pitchfork band, you lost it. So now you could see that retracement to backtest the bottom of the pitchfork band before rolling over and continuing down here. But your market structure is bullish locally. And we did break that naked weekly, naked daily, and daily level. All of these have been broken now. That was what we were looking at on Tuesday. I think we were coming up to it right as the stream was going. Let me hide this for a second, and let's get rid of this. In a bullish scenario, this was a three-wave corrective move down. If you look in lower time frames, it's likely that this was a three-wave corrective move down. Now we could see 1, 2, 3, 4, 5 in a contracting diagonal, which is a motive wave, right? So if you're going to get that motive wave in a bullish scenario, now that the motive wave could be ending at the back test of the pitchfork, you could get a move down to your golden pocket before seeing this continue up to new all-time highs. A bearish move would be, this would be like some sort of double 1-2. We would probably want to see one more high in here. A double zigzag before continuing down. Let's zoom in. And I want to pull a new volume profile from the highs sideways, just looking at this entire range. Yeah, it's interesting that you're breaking above the value area high and trying to hold it. So as long as we can maintain above the value area high at 5129, 5,129, you are likely to continue pushing up here or looking for a double top, one more high in a double top. But I would be very aware that we rejected pretty much exactly from the lower part of the pitchfork band after losing it. And so you lose the pitchfork band, you bearishly backtest it. If you reject, you expect to continue down. What I would also do now, because this contracting diagonal, 1, 2, 3, 4, 5 could be done. You want to pull your golden pocket from the lows to the highs of the contracting diagonal. You want to look at that golden pocket. We're going to put that on log scale because that's a huge move. Man, I don't like the confluence you're seeing there. But also in traditional markets, the 0.5 Fibonacci is respected a lot more. And you can see where that 0.5 is coming in at the value area low. So 4,807-ish dollars. That's going to be pretty nice there. Let's look at our naked weekly points of control in here. This is also going to be nice because that is going to be where your 382 Fibonacci is going to be around. We'll check that in just a second. I want to look at your naked dailies first. Wow, there's no okay, but you do have that naked daily right around that naked weekly. And you can see from yesterday's naked daily, actually that's today's. So we're losing it, kind of back testing our point of control for the day and starting to reject from that area. Oof. Money flow looks very good on this thing on the 2 hour. Let's go to the 4 hour. Yeah, but you were seeing bear divs coming up into this pitchfork band retest. You can see the bear divs on the chart. Money flow was very aggressive though, so that was a very hard short to get into. And because we are so far holding the value area high, which was resistance, now being flipped to support, you have to expect this uptrend to continue until you lose this value area low. Once you lose that, you can start getting concerned of that bigger drop down. Yeah, there's not even really 8 hour bear divs or anything like that. So 12 hour, do we see bear divs? No bear divs on the 12. Man, gold looks pretty bullish, actually. It looks pretty bullish. I want to pull that 382 now from the lows to the highs that we just made yesterday. Strong trend. And we will put that. Okay, so man, this is a bit of a tough one here on gold. What I would say is, so here's the thing for gold. All this overlap that we're seeing in here, the only motive wave you could say, and a motive wave is like an impulsive wave, right? But because we have so much overlap between the highs and the lows here, you would have to say that this is a contracting diagonal, right? Some sort of contracting diagonal. But generally when a contracting diagonal ends, you get a sharp zigzag correction. That's the most common thing to see after a contracting diagonal ends. I would be looking at that $4,800 area because you do have this internal liquidity below it, the second pivot of the wedge of the contracting diagonal. The other, I mean, it's not very bearish right now. What was your highs is now being flipped to support. So until these can get lost, I would expect maybe that this is going to continue pushing up here. And personally for me, I wouldn't be looking for longs because you're near your big resistance of that pitchfork lower band. But I also wouldn't be looking for shorts yet. There's not enough until you start to lose this. And then, of course, you would have to adjust. If you lose it, I would look for the back test and short the back test. My stop would go probably above that lower high, and then I would be targeting that low down there. So honestly, I don't see any good trades for gold right now, but overall gold looks bullish. Like even if we get a corrective move down over the next couple of months, you know, I think we could even fall to like $4,000. Even if we do, I will be looking for swing longs to new all-time highs on gold. Weekly time frame still looks very bullish, but you are developing some pretty aggressive bear divs now on the weekly time frame. Between this weekly high and this weekly high, you can see the bear divs. Money flow is starting to top out, so be careful. Nami's money flow looks very bullish still, but you do see the bear divs. The bullish money flow will overpower a single drive of bear divs every time. So until this continues on the weekly time frame, you know what? I literally talked about this a few weeks ago. We could see a move up to $7,000 on gold. You know, $6,800 to $7,500 over the next 6 months on gold. I would not be surprised. And because we are looking at that bigger impulse up on gold, we're looking at a potential double 1-2 impulse here. You know, wave 1, wave 2, wave 1, wave 2. Third wave could bring you all the way up to 7K, or it could end here. We could get some 4-5s coming in here. 4-5s, 4-5s. We would have to just see how, and this is on the weekly time frame. So though, you know, this impulse could take another year to play out. But gold overall macro looks very, very bullish, guys. Very bullish on the macro time frame. I am expecting new all-time highs, but we might see a pullback for a couple months just based off of, let me actually just hide that instead. And I don't know why these are here. Let me get rid of these. So just based off of what we're seeing here, I mean, man, and even in your, so let's say on the weekly time frame, you're looking at a double 1-2 impulse. Wave 1, wave 2, wave 1, wave 2. This is your big third wave. Within your third wave, you're still looking for a 5-wave count. 1, 2, you're still clearly in your third wave here. You could be seeing a pullback in a 4 before seeing a 5 in your third wave. And maybe your third wave is going to end around 6K. That would complete the bigger third wave, right? Because you want 5 waves within the third wave. Then you would see a pullback in a 4, and then you would get a 5, and then you get another pullback in another 4 before getting another 5. And your pullbacks, you're going to be looking at least within the third wave, the very bullish count that we're in right now. Your pullback, you could expect to take around, you know, 150 days. So what, 3 months, 4 months or so. So if this is going to end with one more new high at like $57,000 to $6,000, then you could pull back for 3 or 4 months from there. We'll have to see how this plays out, guys. But gold is super bullish overall, I would say. As far as the lower time frames, I don't see any good trades here. For me personally, I don't see any good trades. If you would have shorted this, it would have been trying to catch a knife because the money flow was so strong looking on the 2 hour and under. Like, look how strong this money flow looks. You do have some bear divs here, but against that money flow, I am not touching that. And now that we're holding the value area high, the only thing I would look for right now is if you do come up and make another, like SFP, the highs from Monday into this pitchfork, because oftentimes at these pitchfork bands, you'll test it a few times before actually dropping. Usually it's 3 taps, actually. Tap 1, tap 2, tap 3. Like a mini distribution range. Turbo. And we're not going to spend too much time because we did this on Tuesday. Yeah, I mean, I think if we remember on Turbo, we did come down to that 1.618 Fibonacci extinction. So we're still looking for that bigger move down. 1, 2, 3, 4, and then coming down ultimately to this box for a wave 5. Now, if this was the end, 3-wave corrective move in your wave 4, you did reject from that 382 Fibonacci. Now you're looking at 1, 2, 3, 4, 5, something like that. You're looking for continuation to happen, or you're looking at the even more bearish scenario of a couple like 1, 2, 1, 2, then the 3, and then some 4, 5, 4, 5s in here. What I would be looking at if you're trading Turbo is this bottoming range, right? You have a bottom kind of, I would even say this is your bottom range that is forming. Pull the volume profile for that bottom range and trade the range until it breaks. You've lost your POC. You lost it. You rejected from it. You're at the value area low right now. You're trying to hold on for dear life here at the value area low. I don't know why. Okay, Nami was showing some bull divs between earlier, but now between Sunday's low, a weekend low, guys, remember that weekend lows often get taken out. You do not see bull divs yet. You would if you take out that low, but you don't because it's not a lower low yet. So I would be looking at continuing down to take out that low. Oh, man. And this looks very 3-wave corrective, but so does this in some ways. 3-wave corrective so far. You might be seeing a larger now, and then after that, you could see another 3-wave corrective move before coming down in your 5th wave. Like a flat, this 3-wave complex WXY would be like a longer, flat, complex correction before ultimately coming down, taking out those lows. Yeah, because if you could take out this weekend low, you would see some nice bull divs. You haven't taken out that low yet. I would be very concerned that you haven't taken out that low yet. And there's one more thing that I would do. I would adjust this volume profile to just look at the price action. Yeah. And there's 2 ways you could look at the ranges. This is part of it, and then also just going from the end of the dump. This is more of your sideways range, but this is more of your local price action. And you can see here, lost value area low, back tested it, you rejected, right? Just like on Solana, when you reject here, just like on Bitcoin, when you reject here, you eventually expect to take out your lows below. So now I think we do have a high probability of taking out those lows. It's just, are we going to see a zigzag down to take out those lows first? It looks like it. But either way, I would be looking at taking out these lows, those weekend lows. Sunday lows. If you get the SFP of those Sunday lows, you could look for a long because we're seeing some bull divs potentially on the chart, or they're already formed. They could continue to confirm. if and only if you see the SFP, right? So you want to pierce below, start to close 5 to 15 minute candles above. That's when you can long it. Stop loss would go below that wick. And I would at least be targeting, well, the value area high is not too good of risk management, depending on how low this wick goes. You could target that naked daily in that point of control up there. You would also want to pull a fib to wherever that low is. Look at your golden pocket, and that golden pocket would be at value area high. So I would probably be looking for that as my overall long trade with some TPs along the way. Okay, shoot, I'm spending a little bit too long on these guys. I'm sorry about that. Chad P, welcome in, man. Good to see you in here. Bitcoin's about to fall. All right, let's check Bitcoin out. What is she doing? Oh, she is falling. She is rejecting the top of the channel. Now, let's watch this VWAP, guys. The VWAP was earlier today, flipped to support immediately, but we haven't backtested it for the day yet. Now, we did have some pretty gnarly bear divs in here. Pretty gnarly bear divs, and now your money flow's about to cross into the red. But look at Nami's printing a bunch of hidden bull divs as well. I honestly, I'm still in the long from lower. I will be looking for a bounce at this VWAP. Now, if you start to lose the VWAP, it's probably over. And you probably are going to come down again, all the way down again. Because this is our low time frame channel that we're rejecting from the top of it. Just from yesterday's high, you know, from the two lows, pretty much Sunday low, Monday high. Race, what was that? Oof. That doesn't look too good. Yeah, I mean, this thing is very bullish overall. But here's the thing, you're finally breaking by, you can see you had a sort of a distribution range up here. This was your distribution range up here. Model 1, you have a tap 1, a tap 2, a tap 3. You have bear divs as the range is forming, money flow draining out as the range is forming, as soon as it crossed into the red, you're starting to get that big dump. You've now broken market structure bearishly on the weekly time frame by taking out this low right here. You've broken market structure, and look at that low was your prior range low. You lost it, you back tested it, and you're starting to reject from that back test. Yeah, and I would even say from this low here, you could be 1, 2. Man, all of this would be a 3. This is a 4 and a flat, and then you're 5. So you did finish that last impulse. So you could even be dropping as low as, you could drop to 257, like 260 over 250, 258 to 250 over the next weeks here. Couple, 3, 4 weeks, 5 weeks or so, you might drop down to this area. That also happens to be around your prior highs in here. I would definitely be targeting, okay, that liquidity grab was taken today. Very interesting. Very nice. Actually, not today. A few weeks ago. I'm sorry, I'm on the weekly chart. Very nice liquidity grab. But here's the thing, you're grabbing liquidity, you're seeing a move up. Are you just moving up to back test your range lows or your range value area low? Yes. So you see I had this distribution range up here. You're starting to distribute with bear divs. You lose it, you grab local liquidity, you move up from it, you back test it. If you reject from this area, you expect to continue dropping and making new lows. And I would expect to continue dropping at least to take out this liquidity at 284 and then eventually down to 250-ish. But 250-ish could be a good long if you're going to continue bullish market structure. Let's look at our monthly, do we see monthly bear divs here? Unfortunately, yes, we do. Monthly bear divs, money flow starting to come out. 1, 2, 3 drives of bear div on the monthly time frame. Nice bounce from that liquidity grab, though. So your key thing on the high time frames for this, first of all, you could have looked for a long off that SFP there at 330. Now, what you want to see is we back tested your value area low, your kind of prior range value area low, and you're rejecting from that back test. Gosh, this thing has a lot of gaps in it, huh? I'm wondering if we're just coming up to fill this gap. See, I don't know how this trades, if it fills gaps often then reverses or not, but I would be looking at, it is starting to see, so you had your aggressive drop here, aggressive drop, and then now we're starting to chop, starting to see some exhaustion here. So I would be pulling that channel. Yeah, you rejected the top of the channel. You rejected the bearish backtest of the value area low in your prior range lows. To me, I would really be looking for potentially, even on the daily time frame, rejecting from your golden pocket or even the 786 above, like this general area at the top of the channel. Golden pocket 786 to continue down. And honestly, I would be looking, you want to kind of follow this trend that you're in right now, this descending channel trend. But with this rejection here, like a couple weeks ago or last week, it doesn't look good. It doesn't look good at all, and you could continue dropping. Now, if you wanted to look at the volume within this trend, right? This trend here, you could pull a volume profile for that trend. So from that low over pretty much all the price action within the channel, and you are above the value area low and the POC. That actually is a decent level. As long as you don't start closing daily levels below that value area low, it's not the worst looking, and you could continue to chop sideways to kind of continue back testing this value area low at 330 or 391. You could continue to kind of try to break it back into the profile. And if you break back in, then that's going to be good. But overall, be careful, man. This thing's been straight up like a monster. And you finally started to see that distribution weakness up here. And it did drop down. And now, even after dropping down and losing the range, you back tested it. And as long as you back test and reject here, you're expecting to take out those lows, and probably going to continue down to the next major liquidity. Where did you take that VWAP on BTC from? Which VWAP are you talking about, Yoav, Patreon? Bubba Trading, welcome in, man. I want to check Bitcoin real quick. Wow. Okay, so we are seeing shorts coming in. This could be fuel. Look at this push down. Shorts, and they are fresh shorts coming in. So if we do bounce from the VWAP, you could squeeze those. You could squeeze right up to 65K. That's going to be important. The VWAP is going to be hyper important today, guys, because look at, we flipped above it, back tested it, continued up. I do not like this exhaustion that we saw up here, but that could be just low time frame exhaustion before we make a bigger corrective move up to take out 65K. That would be overall more bearish, though. So the fact that we are dropping to the VWAP is a bit concerning for me, guys. because it could be 3-wave corrective move up to 65K. Take that liquidity into your lower high golden pocket and then continue the trend. It is nice, though, in some ways that your CVD is dropping because it's going to invalidate those bearish absorption that we're seeing. So let's do this. Let's throw a vertical on this high. Okay, so your CVD was right here. So if you start to fall below this line, it could invalidate your bearish CVD absorption. You would not be seeing higher highs in the CVD anymore. Man, it depends on... Well, we'd have to move this down to here. Yeah, so you just need to drop a little bit more, guys, and then you could see that bearish CVD absorption be invalidated. Another thing is this big prolonged drop in open interest here already kind of makes it less probable to play out. But until we start to, just from the rejection from yesterday, this was an important rejection yesterday. Anchored VWAP from the from your weekend highs, the 68.6 highs, and your bearish backtest to the value area low. As long as we're below that, you might continue maintaining bearish market structure before seeing a huge collapse. The one bullish scenario that we have, well, there's a couple. I mean, we did change market structure bullishly by breaking, you know, some market structure. We broke these lower highs here. So you have your bullish break in market structure. So now you could look for a lower high or a higher low before a higher high. And you could even pull the golden pocket from today's low to the high that we made today. You really can't lose this golden pocket at 63.3 to 63.4. That's your last bastion of hope in some ways. Yeah, and your naked daily point of control's in that zone. It's not naked yet because the daily candle hasn't closed, but it will be. The one below us, so if you go onto the Coinbase chart, this one are you talking about here? That is from the bear market lows. I'm just going to delete that. And I'm going to hide our small little trend. So that's from your bear market lows all the way at 15.5K on the Coinbase chart. Now on the Bybit chart, you can see, let me go to the 2 days just so it makes it a bit easier. We've actually lost it already, and it's been acting as resistance within this range. Not a good sign. But I like the Coinbase volume levels better, and if you look at the index chart, which indexes like most of the major exchanges, it is still below us. 58K. So index and the Coinbase chart, I would go with those more than the Bybit chart. Binance is even lower. Way lower. Binance charts all the way down to 42. Yeah, guys, please hit the like button if you got something out of this stream. Also, remember, if you want to join the Telegram, I try to let you guys know when I'm taking trades in there. I try to answer questions. If you tag me in the general chat, you can ask me questions about Bitcoin, about some of the altcoins. All you need to do to join the Telegram is join BYDFI using my affiliate link in the descriptions. in the description and then deposit $100 into the exchange, that $100 is your money to trade with. You're just kind of depositing on the exchange in hopes of testing it out and trying it. You'll get the 20% discounts on trading fees. You can get the 50% deposit bonus if you do KYC. And once you've done that, click the Telegram link. Once you're in that Telegram, type in /verify in your BYDFI user ID, and you'll get into the Telegram. And once you're in, you're in. So if you want to join the Telegram, that's how you do it. Man, I did not see this. Let me check Coinbase chart. Look at the money flow on the 2-day on both NAMI and Market Cipher B. The fact that our high time frame money flow is leaving so aggressively does suggest that the fourth wave could be over and we could be about to dump to 57K like before making another new high, before even taking out 69K. 3 days rolling over and already aggressively rolling over on NAMI. And we would have some very nice bull divs if we come down to 58, 57K. This, I didn't recognize this till now, guys. 2-day, 3-day. Let's look at our 1-day. 1-day money flows coming out again on Market Cipher B pretty aggressively. We did print a hidden bear div this weekend on that high at 68.6. And look at the last time we printed a hidden bear div was our 71K high. So we keep printing hidden bear divs, and a hidden bear div is a continuation pattern. So you have lower high, you expect to continue down. Lower high, expect to continue down. I mean, this just doesn't look very good, very bullish to me. Now, I am in that scalp long. But remember, that's why I'm taking my first TP at 65K, because everything I see more macro time frame is bearish. Our Elliott wave count on the macro time frame is bearish. And there is a possibility that we are done with our fourth wave and we are about to break down to take out our 60K lows. Weekly time frame is in the red. Now, NAMI is starting to try to curve up here, but it depends on how this week closes. If this weekly candle closes this red, it'll start to roll over again. We're also, oh man, I did not see this until, this wasn't like this a couple days ago, but we pretty much have invalidated your weekly bull divs on NAMI. It's already been invalidated on Market Cipher B. That does not look good. So if we would have came down here aggressively, you could have seen, even yesterday, you could have seen those bull divs. But with this week being such a big red candle, that momentum wave is extended now. We have invalidated our bull divs on the weekly time frame. Guys, we could be going into a serious bear market where this bounce from 57K could only bring us up to, like, you know, to test your range lows up here. You know, maybe, what is this? 80K, 75 to 80K before ultimately dropping into the 40s. You know, taking out your lows here. And that would be kind of your left shoulder, head, right shoulder on the weekly time frame. Break down, spend another 6 months to a year in a bear market. We did have the high time frame bear divs on the monthly, on the weekly, on the daily up here. It looks like we're cooked. You're right, Tony. It looks like we're cooked, man. On the high time frames, it looks like we're cooked. Now, as traders, this is what's great about trading, guys, is there's different types of trading: scalp trading, day trading, swing trading, right? And even as traders, we're obviously, you want to be short from higher, but you can look for hedge longs because you never know exactly when the trend is going to change, or you can just play small bounces to the upside, right? So, you know, earlier today, we had the signals to look for a small bounce. That's why we took that long. If I lose the VWAP, I will close out probably 50% of the trade with a small profit, not near as big as I wanted it to be, but it would still be a win for me. And that's still scraping some money away from the market every day. Yeah. We're going to have to see how this VWAP reacts here. Anyways, guys, I've been streaming for 3 hours now. I do got to get going for the day. I got a couple other things to do today. I will be live again on Thursday at 2 p.m. Eastern Standard Time and Friday at 2 p.m. Eastern Standard Time. And tomorrow I'll put out a video around market close. Thank you all so much for being here today. Great stream today. I really appreciate the super chats, you guys. Thank you so much for the super chats. And I will see you soon. Keep an eye out. If you're in the Telegram, keep an eye out because I'll keep you guys updated on this long trade. I'll also keep you guys updated on if I see any potential altcoin trades that are really good that we could take with high confidence. So thank you for joining, and I will see you.